non-approved test to be used as long as labs and others are able to validate themselves, and then they have basically a 2-week window to get that approval and to apply. So that continues to be an issue now as we're shifting gears and looking at these antibody tests. But the same problems of production, of supply, of how many are out there, where they come from, continue. And so that's something that we have to watch and have to be really careful of. A lot of companies, especially private larger companies that have the resources, are likely to be getting access to these and likely to want to use them, of course, to get companies back, their workers back in. So that's one of the things that we have to wait and watch, and just have everyone be really cautious about which tests they're using. But as you've mentioned before, the testing itself, period, is something that we have to be
What's
cognizant
up,
of,
everybody?
because at large,
I'm back.
the U.S.
It's
is not
Monday.
prepared and does not have all the testing it
Good
needs
old
to reopen.
trading, stocks
What about,
buying,
forget
whatever you
about
want
the
to call it.
antibody testing, just testing in general, people who believe that they have
Glad to see you
COVID-19
guys
and want
back.
to get tested. Where do we stand with that? Are we making any headway there?
Headway, yes,
Another day
but we're
on the
still not where we need to
markets.
be. If you talk to any health expert right now,
Right
we
now, I'm
should be
setting up my
multiple
chat on
years ahead of
my
where we are in
laptop
terms of capability. It is
so I can make
still
sure
symptoms
I
only. It
respond
is
to all you
still,
guys' messages.
appointment only
You
for
know
the
how
most
I do.
part. There are some places
What
where,
up,
where
Ron?
it
What's
has been
good,
demanded
brother,
that you must
man?
get these tests, but it
Let me run
definitely
my
is one
little
of those
test to
things
make
that
sure all
we
my
remain
chat's
a
working.
little bit behind on, as you said in the beginning, and it's something that we need to be very careful of. And this is going to play a vital role in seeing how governors end
I
up
am back.
determining whether or not they're ready to reopen, and whether or not they pay attention to the capacity that they currently have. We know we've heard Dr. Birx and others at the White House task force talk about calling. There's going to be a call with
Yo,
governors
Ron,
today
how
to
you
really
doing, bro?
ascertain
You been doing
where
all
those
right?
high volume testing instruments are, and whether or not they're all online. We know that cost has been a problem, reagents
You
have been a
already
problem,
know
swabs
I'm
have
up
been
and
a
working
problem,
these
and swabs
markets,
apparently are
bro.
something that they are
What
using
you
the
looking
Defense
at,
Production
man?
Act for now.
You gotta let me know what
So
you're
we
looking at,
are
man,
still in a wait and see
so
mode.
I can keep my
Most
eye on it too,
experts
bro.
I've been talking to are saying we're
I
still
can pull up
flying
the
blind,
chart
Alexis.
and let me see what
Oh,
you're
goodness.
looking
All
at.
right. Thanks for the update, Angelique Hemlani. Coming up next here on Yahoo Finance Live, where do things stand with those small business loans? We're going to talk to the head of commercial bank.
First time looking at the charts since Friday. I should have been marking them up Sunday. That's what I was supposed to do, but I got tied up doing some other stuff. But I think I did mark some zones Friday, but I'm gonna take a look at them again and see where we stand. But these are stock zones. I think I don't even remember what I did. I think it was stocks or Forex, probably even both. Um, the markets. I don't know what the markets are gonna do today, so I'm gonna mark some zones and probably grab some dips before the retracements. GJ, but you be looking at the 15 though. Let me see what you're looking at. Hold on, GJ. See, this one's about to be a breakout. Let me see how this looks. I think I was looking at this one too, actually. This one's about to break out in a direction. I'm not sure which direction. But like I know you like to trade on the smaller time frames. See, this one's about to break out. I just don't know. You just don't know. Like I'm not even gonna trade this. I wouldn't even trade this right here until I figure out which direction I want to go. Yeah. I know. I know. I just like trading on this one. Well, because I do, like you say you be busy all the
We
time.
are set up for.
So, like when you trade on the higher time frames, man, like if you get a spot, let's say right here, you know what I mean? They call it sealing the floor or whatever. So, If you get a spot right here and you put your stop loss spot right here, man, you can just leave and wake up. You know, even if you're right here, that's a lot of pips. You know what I mean? That's why I like the longer time frames. I used to trade on the smaller time frames too, but not anymore.
Layoffs and furloughs there from a number of news organizations, both large and small. Our editor-in-chief, Andy Serwer, is joining us now. And Andy, good morning. I know you wrote about this issue over the weekend, and you point out, ironically, that media companies are hurting at the very time we actually need news and information possibly more than ever.
Yeah, that's right, Alexis. And not only do we need news and information more than ever, but many of us are turning to these news organizations to get information. So
I'm looking at a couple stocks real
traffic
quick.
to websites and on regular television and even traditional newspapers is soaring. It's sky high. But at the same time, advertising is plunging. And that's because advertisers don't want to put their ads up next to stories about coronavirus. And you see this historically. This is what happened in the wake of 9/11.
I'm gonna catch this breakaway, the GJ break.
To TV,
Yeah,
and
just gotta keep an eye on it.
find out what was going on.
But it's gonna be a while because you know, if the daily looks slow, you know the 15 will be even slower.
While the traffic is up,
I mean,
the
you can
ads are
catch
down,
pips here and
meaning
there,
the
but
businesses
it's
are
just too
doing
much for me.
poorly, and that is the case across the
I
board.
hate
except for
consolidation
a very
times, man.
select few of the most profitable, the biggest news organizations like the Wall Street Journal, Dow Jones, NBC, and companies like that. And so news organizations have been laying people off, furloughing workers, cutting salaries.
Andy, what about some of these alternative revenue streams for media, whether it's subscription or even the conference business? The past 5 years, we've seen an explosion in conference businesses. What happens to that?
Yeah, it's interesting. I mean, first of all, just to deep into get into the advertising business a little bit more, and then I can pivot back to what you were saying about the other sources of revenue. You would think that digital advertising might be better because the customers are there, but in fact, digital is down more than traditional newspapers, Brian, and that's because advertisers can pull their ads immediately from digital, whereas it's harder to do that with TV or newspapers because you've got longer programs you're committed to. But getting back to your question about other sources of revenue, conferences, which have been a big deal for a lot of news organizations, are now over. I mean, they're just not happening at all, obviously. So that source of revenue has completely dried up. My old employer, Fortune magazine, used to get a lot of revenue that way, and those conferences are not happening for the time being, and they did some layoffs. The real holy grail here, Brian, is subscriptions. And that's what news organizations, smart ones, have been moving towards increasingly. You've seen the New York Times.
Even though I don't really like this, I'm gonna keep my eye on this.
And there's sort of two sources. One is a paywall.
If it falls below this line right here, I got marked. I probably put in
it's consumers
the long entry, I think. I don't know.
That's actually what's been saving news organizations. The ones that have been able to do that, that's been the saving grace.
Yeah. You know, Andy, what I have noticed, though, is some places that would charge you to look at their news, they're actually waiving that now, saying, we believe that information is more critical now than ever. We want you to be able to have it, and pay shouldn't be an issue. But I also want to bring up with you what's happening in Australia,
it's $500 a share.
because the government there is telling Facebook and Google they have to pay media companies for news content there. If we saw something like that happen here, could that possibly save some of these media companies?
Yo, Ron, have you ever looked at JCPenney, bro?
A quick point about the coronavirus.
I got a pretty decent entry on this, really. I know
the New York Times, which has a paywall now.
I know it's about I don't know what's going to happen, man.
Seen as a public service.
I know it looked like it's going to bankrupt, but I invested a little bit in it anyways.
So you kind of get a
just cause. And I was
Getting
fortunate, and I got in at
news
24
this morning,
cents.
We're seeing coming out of Australia, which is the Australian government saying that they're going to be making Google and Facebook pay for content. And the companies, Google and Facebook, have responded and said, well, they're not too happy about that. I mean, we've seen this before in some other countries like Spain.
I got in this at 24 cents,
they were going to make them
and it closed at 27. So now it's 26. It's not bad, not bad. I mean, I'm still in profit. Profit is profit. Profit is profit. That's a low too. So
this could be
I don't know if they can survive. I know they got they had 30 days from, I don't remember what day it was, but 30 days from some day to figure out what they're going to do
by the way, this thing that's happening
with that $12 million.
Google and
So it's gonna
Facebook
be a
will
hit or
basically
miss,
take one
but
of two
it was
forms,
worth
either
it for
direct
me
payments
because I'm
or
pretty
revenue
sure if
share
they come up with
off
some good news,
revenue that comes from the
it's
ad
gonna
that
drive the
comes from
stock
news
up a little
stories on
bit.
their sites. This is a very
But
real
this was
deal.
a
This
like
comes from the highest
this was like a
levels
fear
of the Australian
fear
government. So
cause this.
Facebook and Google
When
need
you
to take
see
this
drops
very
like that
seriously.
with no retracement,
I'm
nothing but
saying, see
fear.
if other governments
Like it was
use
just a
that as a
straight
blueprint.
drop,
Andy
no
Serwer,
kind of
thanks as
retracement.
always.
Like it tried
Thank
and it
you.
was like,
All right, coming up next, what is
no
happening
type of
with those
retracement. Like
small
this right
business
here, that's
loans?
what I'm talking
Are
about when I say
businesses
retracement.
and the right ones getting the money
You know what I
coming
mean?
back?
There's
Right after
always some
this.
kind of, you know, like boom, boom. They don't just do one thing and that's it. But when they say bankrupt, everybody was out. Everybody was out. So on the good side of it is, since the news was already in, that's when I decided to get in. So it can't get no worse than this. You know what I mean? Can't get no worse than that. Remember what I said? I got in at 24 cents. So I'm in profit. You know, profit is profit. Profit is profit. If you're not in the stock market, you wouldn't understand.
We hear it over and over from investors. I wish I had bought Amazon or Netflix when they were first recommended by the Motley Fool. I'd be sitting on a
Congressional leaders and the White House say they are, quote, very close to signing off on a new round of relief funding aimed to help millions of people hurt by the coronavirus pandemic. A big part of that, more money for small businesses and the payroll protection program, which we know ran out of money in the middle of last week. I want to talk about this now with Chris Giamo. He is head of the commercial bank at TD Bank. Good morning, Chris. Thanks for being with us. First off, where do things stand with those small business loans at your bank? Are you in the process of going through applications? Have any businesses been given money yet?
Yeah, well, good morning, and it's good to be with both of you this morning. So at TD Bank, we, like many banks, were a very strong participant in this important program and really saw incredible demand from our client base, seeing an extraordinary amount of applications. We're proud that we were able to secure funding for over 26,000 of our clients, being really one of the top 5 banks as far as customers reached through this program, and one of the top 10 banks in funding throughout the country.
Chris, when you talk to these small businesses, what is their plan
I'm keeping
to
my eye on
restart their
AT&T.
business?
I need to start marking zones for this too.
It's a great question. It's something that we're really focused on. We kind of pride ourselves as giving trusted advice to our clients. And this program, while it's critical, is just one measure. It's one tool for them to kind of provide a gap before they can reopen. So I think it's critical that businesses do focus on their planning around this phased reopening of the country and how their businesses are going to participate in that.
Chris, I'd love to get your thoughts on some criticism this program has received, saying that a lot of larger businesses, ones that we wouldn't consider small businesses, were getting some of the funding, most notably Ruth's Chris Steakhouse, Shake Shack. They got a $10 million loan. They are out this morning saying they're going to give back that money after a lot of criticism. But was that a loophole in the system here that allowed companies as large as those to get money from the small business loan program?
It's a good question, and I think anytime you're
I'm gonna
trying
get
to
some
stand
AT&T.
something
Let me see
up
what it
and
does when the
that
market
is
open.
so large
Normally, when the market
and
open, the price
important
shoots up or shoots down.
in a quick amount of
So
time, there's always going to be some
I'm
unintended
gonna keep my eye on it.
consequences. I think two things. I think for the most part, these dollars are going to the intended use to keep payrolls open and keep people off of unemployment and just bridge companies for this 2-3 month period until they could have a
If
phased
if
reopening.
AT&T
I
shoots to
do think there's some
$29,
responsibility on the
I'm gonna get a
businesses
buy.
to be good corporate citizens in this, and if they don't need the money or they weren't necessarily impacted by this pandemic to a point where they
Matter of
need
fact, I'm
government
placing an order right
assistance,
now.
they really
Buy
shouldn't apply.
limit.
Also, we know that Congress says they're close to another round of stimulus here, and in that round of stimulus would be more relief for small businesses. What would your message to lawmakers be right now? What would you at TD and other banks around the country want to see, need to see in that legislation?
Well, I think this was a very important program, and as I said, I think it really
I'm doing this
is
off my phone in case
a
you guys
bridge for
wondering.
businesses to bridge themselves till reopening. So I think it's critically important. I would hope that the program is reopened and refunded. And I think if they could keep complexities out of
It's
it,
good to use buy
this
limits because
again was stood
sometimes
up very quickly.
it'll
And
tap
it
a
took a
zone for
while
a
for
split
banks to
second,
be
and if you wait
organized
too late, you
to
missed it.
process these applications in the volumes they were receiving them. And any new additions or filters that go into the program could cause further delays and complexities. Most banks right now, like I said, we're very proud that we reached a lot of our clients. We don't want one client left behind. And I think all of the organizations definitely have a backlog of applications that they would be ready to process in an expedited way if the program's reopened in the same form that it was initiated.
Chris, a lot of sources that I've talked to suggest even despite the help from the government, we're looking at a potential wave of bankruptcies across many sectors looking out over the next 2 to 3 months. Are you seeing that when you talk to clients? Is that looking like an option?
It's probably too soon to say, but I would say
If you
many
ain't
of
catch
these
that GJ drip,
entrepreneurial
but you talking on the
businesses
15?
really are not built, and they
I
don't
don't
have
want to
the
catch them. Let me
balance
look
sheets
though.
to withstand 1/12 or 2/12 of their gross revenues to either
What
be significantly
chart you
impacted
looking
or in
at?
some cases entirely go away. So, as I said earlier, this program and other state and local programs are going to be critical. That being said, I think the business owners
Oh
themselves
I don't
are
trade
going
on the
to have
1
to
minute.
really go into crisis
Nah, you
management
can have
mode and
that.
see how they
I'll
can
look at it though.
take their businesses and pivot so they can deal with this in the short term, but how they position themselves for the longer term. But I do think there's going to be a long economic impact.
This cat say
To
1, boy.
businesses, both on the
15,
commercial
you know what I
side
mean?
as
It's
well as
alright.
consumers.
This cat say
All right,
1.
Chris Giamo, head of commercial bank at TD Bank. Thanks for your time this morning. Good luck with the program.
Thank you.
Stay with us. We have got the opening bell coming straight up at Yahoo Finance.
It's over now. Yeah, it's all good. It's all good. I don't really mess with that. Hold on, let me set this real quick. 29, 23. You wrote it down? Hey, hold on. The order has been submitted. I just placed an order for AT&T for 29.23. Now this it might not drop. You know what I mean? But if it do, I'm golden. I should place an order for. Let me look. Let me look. Nah, I'll just stick to where I'm at. I'm gonna stick to where I'm at. I ain't even gonna mess with it. If it hits 29, 23, I'm in. If it don't, then I'm not in.
Welcome
Oh
back
yeah,
to
yeah, yeah.
Yahoo Finance
Small
Live,
lot's
where we
fine.
are
Small
seeing
lot's
stock
fine.
futures pointing downward this morning. And this just crossing, People Magazine's parent company, Meredith, has suspended its dividend and also cut salaries, as now we see media organizations suffering as ad dollars start to dry up during this pandemic. Stock futures, as I mentioned, lower across the board.
I don't
Dow
know if it's gonna
futures
hit
off
down
over
this low,
500
but we're
points.
gonna see,
S&P
man.
and Nasdaq futures also lower.
We're gonna see. I just needed to tap it. Just tap the
And
line.
we
You know
have
what
a
I
new
mean?
week underway on Wall Street. And I have to mention that not just equities do we have our eye on, it is the commodities markets as well, as crude oil plunges to a 21-year low. Folks, we now have crude at around $11 a barrel. We are going to talk more about that in another segment coming up. Right now, though, we've got the Dow Jones Industrial Average down about 450 points out of the gate. And I want to welcome Francis Newton-Stacy, Director of Strategy at Optimal Capital, to the show. We also have with us Jared Blickery and Brian Sazi. Good morning, everyone. Francis, you actually point out that this another round of stimulus for small businesses is really going to be key for the market. Why?
Well, the thing is that it's kind of bad news that the stimulus has run out. And
All right,
we still
y'all.
don't have
Let's
most
see
of the
what
country
we
open,
got
obviously.
here.
So, they've had a
American
rapid response, and
Airlines
they're coming in with more stimulus
acting
for
a
small
fool.
businesses. And so, how the equity markets react to that news and what happens when that actually gets signed and occurs is going to kind of tell us what's sort of baked into the cake here and what's not baked into the cake. I expect a little bit more of upward momentum. Not a ton without some kind of a pullback. We've come up off the lows very, very quickly.
Okay, let's see.
So I
Apple.
think that we've got some breathing room. I think the S&P should hold 2812 just to kind of on the close, just to kind of keep the upward momentum going. And then the thing remains that if the stocks start to sell off, all you have to have is a piece of news that's not yet priced in. So the equities might not be under pressure for the second quarter because that might be mostly priced in. Nobody cares what the bad numbers are because we just expect them to be the worst in history, et cetera, et cetera. But moving forward, there will be a number I think that's surprising. And then if any kind of meaningful selling starts, it's just sort of when the Fed comes in and buys those stocks, as they've said.
I'm in a
is
good
not
zone
on
with
the
this
table.
one. I got a real good
Francis,
entry.
talk to us about oil and
I'm
how you
proud of
see
this.
that impacting
This is
the
the reason
large
why I'm in a lot
market.
of other
We've got
stocks
oil now
because of Carnival. Because
down, what did we
my
say,
entry was so
21-year
good
low at
that when I'm
around
in drawdown on any other
$10 and
stock,
change a
I don't
barrel.
really care.
Yeah, what's super
Just look,
interesting about
this
oil
yellow
is
line
that
right
it's
here was my
the
first
the
entry,
contract that's expiring here
and then
very
this second
shortly
line
is
right
the one
here
that
was
moves
my
super nicely, which
my
makes sense.
second
Anybody that
entry.
trades
So,
options really understands
and
time
I have this
duration,
is the stock I
as
have the most
opposed to
shares
sort of the
in.
June and July
I got in
contracts
at
that are
$9, then I got in
5%
at 10, and now it's
respectively.
at
The
12,
thing is
and
that
that's considered
happens
low.
here is that
You
this
know what
will
I
be a
mean?
bottoming process.
As you
We
can
thought that they
see,
were going to
it's
cut
been
10
up to
million barrels a
13,
day. They
14,
said that they're only going to really cut
$13,
9.7 per
So
day, but it's going
even when
over
on a
towards
bad day,
neutral.
it's
So
at
they're not
11, which
cutting
is
right
still good for
away.
me.
And we have an
I like
oversupply
that.
situation. The storage facilities are full.
American
But
Airlines
again,
still
I think the
tanking.
front contract is just pricing in a precipitous decline that has to do with a
I
lot to
might
do with
catch another
expiration
sell
window
right
until we
here.
see
I mean, another buy
a
right here
bottom put in
at
here in
$10.
oil prices.
Then Francis, do you start to nibble at these oil stocks? I can't tell you countless notes that I've been reading out there the past week and a half calling for negative oil, which to me, when I hear negative oil, which I've never heard in my career at least before, suggests more bad times ahead for the oil patch.
Yeah, so the oil stocks are kind of an interesting play. I mean, if you're into dividends, they usually pay great dividends. But for instance, I watched Chevron and Exxon Mobil, and they're well off their lows. So there, it's just watching a stock chart. It's how much they sell off on this news, what gets priced in, And, you know, if it doesn't sell off precipitously, then that's probably going to be more correlated with equities going forward than this price of oil, unless you see, you know, the June contract starting to suffer or the July contract starting to really suffer. And then, you know, those stocks will get hit once again. If you're going to get into oil stocks, definitely either have a super long-term approach because they're pretty cheap as is, or, you know, trade them, but keep an eye on them.
All right, want to check in with Jared Blickery now. Volatility edging higher here to start the week. Jared, what do you have your eye on?
Excuse me. We're looking at the Dow heat map right now. We only see Walmart in the green. It's up 0.4%.
Actually, I'm about to hop in this GE.
If we take a
I'm
quick
about to
look
hop in
at the
this GE
sectors
real
that are
quick.
leading
I knew
today,
I have a
defensive
mark
setup.
set for
So we
that
have
as well.
staples, healthcare. We do have consumer discretionary and tech outperforming. Consumer discretionary is in about 25% Amazon right now. To the downside, we've been talking about crude oil. So XLE, the energy sector, is
Wait,
getting
does this
whacked
stock
yet
even got
again, and then
dividends?
followed
Yep.
by
All right.
financials and industrials. The cyclicals and value stocks really not doing that well today. Let's take a look at the NASDAQ, and we'll sort by performance, and we can see just a few winners, kind of Netflix, which has in and of itself become a defensive play here, along with Amazon and JD.com. These stocks were really leading well last week, and we didn't really see the stocks that were doing the best at the beginning of this rally do that well. And specifically, we can go to the airlines here and just see that United down another 7.5%. A lot of red overall. Alexis?
Jared, what are you seeing in big cap tech? It's amazing to see this run in these big cap tech stocks, notably Microsoft, into earnings in about a week and a half.
Yeah, definitely. And by the way, we do have 100 companies, I believe, in the S&P 500 that are presenting earnings this week. And so if we go back to the heat map here, we'll take a look at what's happened and let's do this on a 5-day basis, and we can see how they really took off last week. So despite being down today, you can see Microsoft still up 7%, Alphabet up about 5%. These are a lot of the former leaders that we had seen going back to 2016. And yes, there is the market is up largely because these big cap, mega cap stocks are up right now. And we'll just have to see if that continues going forward. But it's better leadership than having the airlines lead.
Hey, Francis, I'd love your take on the Federal Reserve and what we might see next from central bank policymakers. If there's another meaningful pullback in equities, when does the Fed come in and start buying up stocks? When are they going to use sort of that last magical bullet they have left?
Yeah, exactly. The greatest question, right? So we sort of know, that sort of is on the table. So it just depends. I mean, if stocks kind of bounce around a bit, I don't see them coming in. Do we get near the lows and they come in? Do we take out the lows and they come in? But what's interesting is even though we don't know when they would actually come in, if they come in too early, we could still then go and sell off beyond their support, which is a risk that they have to consider. If they come in, around or below the lows, then I think we would assume that that's the bottom. So it just remains to be seen, how much selling pressure occurs, what happens, in the third quarter, and how soon we open this country back up. But we definitely know that they still have that ammunition should they need it, and they have said that if necessary, they will use it. So, it's when they put it in. I do expect some selling. We've got to have some kind of a pullback. We've hit.
I just bought some GE stocks. I'm just trying to
50% certainly.
see what number I got in at.
Looking at that fib ratio at 61.8, and if we make it all the way up there, then I will expect some selling pressure because I don't think all of the variables of coronavirus have yet been baked in, and all of the stimulus, as we've seen, isn't necessarily super efficient at getting to the people who need it most, and that's going to cause some defaults coming, and that's going to cause put some pressure on the credit markets. And if you have some major failings in the credit markets, good night, it's over. But if these things can hold up the credit markets, then I think we're going to muddle along here.
All right, Francis Newton-Stacy, Director of Strategy at Optimal Capital. Always good to see you. Thanks so much. And before we go to break, I just want to bring to your attention Walt Disney, down more than 3% right now after a UBS analyst downgraded Disney to neutral from buy, writing that the company is, quote, in the eye of the storm amid the COVID-19 pandemic. We'll be back with more Yahoo Finance right after this.
Boys already in profit. This was the area I marked. I marked this area last week.
Stocks are lower this morning as crude oil crashes to a 21-year low, plunging to its lowest level there in decades as demand shrinks and those OPEC plus cuts we've been talking about don't seem to be having the desired effect on the market. Here to talk more about oil with us is John Caruso. He is senior market strategist at RJO Futures. John, good to see you again. I mean, with crude oil near
This would have
$10
been a good
a
spot
barrel.
for some
I mean,
people.
how low are we going to go? Some people are talking about negative oil.
I'll tell you what, I think your last guest that was on was 100% accurate. I do think this is a little bit of a bottoming process that's taking place right now in the May contract. If you look at the forward contracts, you've got a roughly 100% premium to roll from May into June this morning, with the May contract obviously expiring today. So
Boeing is a good spot
to be honest with you,
for
with the
some people
super
as well.
contango that we're seeing the market in
If
right
you're
now, I
looking for
think it
something to
makes
get in,
investing in
Boeing's always
oil,
good to never
especially the
lose.
oil futures over the long haul, very, very difficult to do.
Carnival's
I do
another
think
good
this is a
one.
little bit of a bottoming process here. But
Carnival's
as
a
a
real good
trader,
one to
I
get
think you
in if
still
you
have
haven't
to look at
already.
selling rallies in the forward
If you haven't already,
contracts,
it's still good to get in on
until we
this.
do see the
One,
economy
because
start to
it's
show
at a
some signs of
consolidation
life
zone
and
right
things
now
come back to normal,
at a
which is going to be
low.
very, very difficult to do. And it's going to be even more difficult to try to
And the
forecast
highest it's
what
been is
demand is
like
going to
what
look
$60,
like 3 months
$70.
from now, 6 months
So
from
you can
now,
do nothing but
even a
gain
year
here.
from now.
John,
Nothing
for the
but
average
gain.
investor out there, can you help us? Can you help explain what precisely is happening? Is it just that there's just way too much inventory?
Yeah, absolutely. I mean, the market right now, I mean, what we've seen on the demand side of the market
I like
has
to
been
mark
completely
lows
unprecedented. We're losing 25
and
to 30
highs
million barrels a
so that
day
way I can
that's
see
come
what kind of
offline
entry I'm
since
going
the
to get.
onset of the virus. There was also a rumor that Saudi Aramco, just ahead of the March production cuts, actually did send a large shipment of crude oil to the United States that is yet to hit the market. You might be seeing that being priced into the May contract right now.
That's what I did here. I marked
The
this one
9.7 million barrel
last
cut
week,
by OPEC,
and I
yes,
said I'm
it's a
going to
record
buy
cut,
here. Even though it's
but
on the
there's nothing you
downtrend, I
can
said I'm going
do
to
to
buy right here.
offset the
And
25
as soon
million
as I
barrels a
got
day that are
in,
coming
it instantly
offline
put
due
me
to
in
the virus.
profit.
So, John, with oil this low, I mean, down 35% here, what does it mean for some of these oil producers? Is it just that we're going to have to see some of them not survive this because they just can't hang around with oil this low?
You're absolutely right. We've already seen a couple companies that they've filed bankruptcies over the last week. I think it's going to be very, very difficult for a lot of these United States oil drillers to actually survive this scenario. I know that the U.S. government was also talking an unprecedented situation where they would actually pay producers to leave their oil in the ground unproduced, for the United States government to take delivery on, going out some months. So that's a scenario that could potentially play out. And I think it's probably a last case scenario for the United States government.
U.S. oil, $12.
John, very
This is
important point
crazy.
there. Do you think the
This is
selling,
crazy,
not just
bro.
so much in
This is so
crude oil, but
crazy.
crude oil related stocks and the producers, that won't stop until the government does step in here and come up with some form of relief plan for the sector?
I think that's partially accurate. You will certainly see a relief rally if you do see the U.S. government take action.
I actually would.
I think the name of the game here is the demand side of the market. You need to see demand come back. Again, we're seeing some unprecedented times right now with the demand destruction that we've seen. I know the president has been talking about rolling the economy back out in phases. I do think once the May contract goes off the board and we start moving into June and July, you are going to see a steady uptick in the market. However, we're certainly still not out of the woods. As your last guest mentioned, I do think that, the bottoms are a process, and it could take 2, 3, 4 months for us to actually, find some stable ground in that market.
And lastly, what about the effect on gas prices? I mean, I filled up this weekend. I'm not going much of anywhere, but I had to fill up my tank, and I spent $1.85 a gallon. I mean, that is insane. I don't remember the last time I did that. So
ExxonMobil,
I guess a
looking
silver lining
good.
here is that gas prices are so low. The problem here is that there's no demand because none of us can.
I got, of course, as I marked some
Absolutely,
more
there's no demand
areas
for
of
the market right now.
entry,
So
possible
you could
entry.
charge 50 cents
ExxonMobil
a
is a
gallon.
good
And
stock,
if people
a real good
aren't
stock.
driving to work and they're not taking road trips
Because of the
they're not
dividends.
taking trips
I
to the
love
store,
dividends, man.
it's just there's
Like,
no demand out there. So it really doesn't
I'm
matter
lazy.
what the
I want
price
you
of
guys to all
gasoline
know
is. If
I'm
I'm
lazy.
filling
I like to
fill my
find the
tank up at
easy
the
way
gas
out.
or my
But the
gas
difference
tank up,
between my lazy and most
probably
people's
once
lazy
every 2 days.
is a lot of people are
Now,
lazy
here I am
but don't try to
once every
find the
2
easy way
weeks
out.
because
They want the
here
easy
we
way
are
out, but they don't
sitting,
try to find the easy way
sitting at
out.
home, and you've got the demand
I'm
structure of
lazy
the market that
and I want the
it's just
easy
not
way
coming
out,
back.
and I try to find the easy way out, and
It
that's
is
dividends.
incredible times. John Caruso, senior market strategist at
I'll
RGO
show you guys what I'm
Futures.
talking
Thanks for
about.
your thoughts on oil today.
Thank you.
All right, want to move over
So
to
depending on how
retail
many
now,
shares
because
you
over the
put
weekend,
in,
Neiman Marcus became the first major
let's see,
U.S.
dividend
department
history,
store
right?
to file for bankruptcy amidst this pandemic.
Hold on,
And of
which one
course,
is this?
that leads us to question, Brian Sazi, who's going to be next? And you wrote a story this weekend that's on our site
All right.
about the fact that
So
Neiman may just be the first of a
American
wave
Airlines gives
of
you
these bankruptcies, right?
Alexis, I don't think a lot of investors
40
have
cents
any
per
clue what is
share.
coming for the retail sector. A lot of bankruptcy and restructuring experts.
That's 40 cents per
spent last
share.
week talking to. There is going to be
Per
a
per
wave
year, of
of
course.
bankruptcy filings
And then of
in the retail
course,
sector over the next
you're gonna
month
make
and a
money
half.
from the
While
stock
these
itself.
filings haven't started, a lot of these retailers were just
ExxonMobil. I mean,
thrust into store
all stocks,
closures.
not
Keep in
all
mind,
stocks, but
a lot of these stores were supposed to
let's
reopen
see.
in the first or
I
second
think
week of April.
ExxonMobil is my best
Obviously,
dividend
that is not
stock.
happening. It takes about 2 to 3 weeks to plan for a bankruptcy
This is my
filing.
best dividend stock.
What my sources are telling me, these filings will start probably mid or late May. At the same time,
I think
or slightly before,
my next one would be
stores
AT&T,
are
I
scheduled to
believe.
reopen. All eyes.
That's why I'm
remain
keeping my
JC
eye on
Penney.
this
We had
one
the
right
news
here.
over the weekend on Neiman Marcus exploring a potential bankruptcy filing this week. JC Penney reports surfaced on Friday regarding potential new $300 million in financing. JC Penney declined to comment to me on that report, but JC Penney looks to be the next company that is right on that precipice of a bankruptcy filing.
Do you think with the bankruptcy filing, is it going to be one of those situations where they try to reorganize and emerge from bankruptcy, or are they just going to liquidate?
Two cases here, Alexis. One, I think a lot of these chains that go into bankruptcy, let's just use JCPenney as an example, they will emerge from bankruptcy with store bases 50 to 75% less than where they went into it based on the contacts and sources I've been talking to on the street. By the same token, you will see retailers completely go away. I have one source tell me Lord & Taylor unlikely to exist after this current situation. Also, too, let's keep in mind, when these stores reopen in the end of May, a lot of folks are telling me there will be chaos in retail.
I got in at JC. Well, this one was just worth this.
I looked in the store and all the inventory is still in there for the past 2 months, collecting
It's
dust.
worth it for me.
Nobody's
I got in
buying
at
this
24
junk. You can't
cents.
take the items and ship it to online because
Jump
nobody's
in at
buying
around
the store.
25,
So when
26,
stores
27,
reopen,
28
you're going to see
cents.
absolute fire sale inventory. If you want to fill your basement with new pairs of pants and socks, end of May, that'll be the best time to do it.
And you mentioned Lord & Taylor. We know that they shut down their huge flagship store in New York City
I'm
months
cool with
before,
it.
maybe even almost a year before this pandemic. So a lot of these retailers
AT&T,
were hurting before this ever
might
even
miss
started.
this one.
Brian, thanks for that
Look
inside
like it's not
look
trying to
there.
come back down.
And stay with us. Coming up next, when we do reopen the economy, what are we, the consumer, going to be spending on? We have some insights coming up next.
Just cashed out my position on the day. So that's cool, man. That's cool, bro. I'm about to start getting in some Forex in a little bit. I just like to catch these markets right here because Forex opens on Sunday, so you're good there. I just like to catch a good spot, catch some good marks on the stocks. Forex is good too, though. Don't get me wrong. I love Forex. Damn, bro. Of all my stocks, I'm in profit on everything except for Disney and American Airlines right now. Only reason why I took an L on Disney is because I didn't know about the wash sale. If I knew about the wash sale, I'd have been fine.
The COVID-19 pandemic has definitely transformed the way we as consumers are
If I
spending
knew
our
about that
money.
wash
But
sale,
the
I'd have been
question is, when we
fine.
do start
But
to
it's all
reopen the
good though.
economy,
So you gotta
will
learn one way or
consumer spending
another.
bounce back, and will it go back to normal? Here to take a deeper look into that,
Just
we
cashed
have
out my
the
okay. If
CEO
I can
of
stay consistent for
True
6 months
Public,
like this,
Caben
I be sitting
Clausen.
pretty.
And
Yeah, yeah, yeah,
Caben,
yeah.
before we
No, no,
rest, I
no.
know
That's
that
what
you
you gotta
guys put
do.
out a
That's what I like
survey
to do too.
recently, and you
But
asked
sometimes
viewers
I ain't gonna lie,
what, if
man. Sometimes I
anything,
get
will they be
greedy.
spending
But
their
when I
money
at
on when
least I've
we
been learning though,
reopen.
not from
What do
like
they
getting
have to say?
greedy.
So
But I
True
mean, yeah, I've
Public
been
is a
learning from getting
crowdsourced
greedy, but
database
like
of people all across America.
better
We're able to get to two hard to reach groups, young and
entries.
wealthier,
You know
who
what I'm
typically
saying?
won't do a traditional survey. What we're finding is really shocking. We knew a lot of people were going to be scared to go back, but the amount of young people, particularly for this study, we focused on 13 to 35, who are unwilling to go back to places like sporting events, 47% until they have a vaccine, gyms, international travel, domestic travel. The story really here is there's two young types of young people in America. There's one type that doesn't really care about this corona situation and they're still seeing friends and they're still going out. They're going to be very quick to go back to most of these things. What's surprising though is there's a group of people who are going to wait an awfully long time. We could be looking at 9 months to a year, especially for things like international travel.
What
We're
about?
all,
Go ahead, Brian.
Yeah, no. What do you? Is it just vaccine related, or is it
I
just
should have bought
a
more
lot of these
shares
young
in
folks
GE, but
are have concern about their job
I want to
prospects?
save some for
two factors here. The the the
AT&T.
generation Z and millennials hit very differently by this. Millennials are feeling the pinch a lot more as a lot of them are starting to start families. If you remember back in the '08 recession, a lot of them were coming out of college. So this generation has been decimated by this twice. Spending is not as much the issue. What we were
Let me
getting
see how
at here
much
is, do
money
you
I
feel
have left to
safe
spend.
going to these things? I think the most shocking one and the industry that has to be really concerned is the gym industry. Gyms already had such a challenge, like
Gotta
convincing
love these
people to sign
markets,
up for
man.
these
Let them
large
know, Ron.
gyms. And now there's actually a health crisis that's happening around it. So that's a real issue. I think the group that can rest the easiest is restaurants and bars. Restaurants and bars are going to see young people come back in droves. But international travel, domestic travel, it's really going to slow. And needing that vaccine, I think, is the big change that's going to keep a lot of people back. Until that vaccine comes out, they're not ready to do it. One other interesting thing for you, you guys mentioned Neiman Marcus earlier. What we found is something even more of a threat, I think, to long-term clothing retail. 31% of young women in this country bought clothes online for the first time in the last 3 weeks. Almost all of them, around 90%, are saying they're going to continue to buy clothing
You so
online.
hype? Hey, that's
So what
good,
happened
man.
was a lot of
I'm
people were
hyped too, bro.
forced
I'm hyped
to
too,
buy
bro.
clothing online for the first
I'm
time
hyped too, man.
whereas
I'm
before
excited
they
to
were
see you
always
doing
held
your
back
thing,
because they
bro.
felt like they needed to
Hey,
go in the
man,
store
make sure
physically
you
try
send
things
some
on.
screenshots
So
to your
that's going to be an
boy.
interesting thing to watch as well.
Let him know, bro.
Yeah, I was looking through your survey. 33% say they shop online more now and will continue to shop online more even after a vaccine is available. But let's get back to when there is this vaccine available, which we are hopeful for and which we're hoping can happen in the next 12 to 18 months. Did your survey find that people are going to be comfortable going back to all of these large events like sporting events like Coachella, for instance?
Yes, with one caveat. The vaccine is key for sporting events.
for gyms, for domestic travel, there's still almost 30% of young people are not going to want to travel internationally, even after a vaccine is out. Now, I will caveat our research in this way. We are in the midst of a crisis. So whenever we're in the midst of a crisis, we know there's a bias that forms, because if you're stuck at home, you're watching the news all day, you're thinking, it's kind of scary to go back out. Let's wait.
I might
We're gonna watch
place
the
a
data
sell right.
change week by week. And our hope is people start to venture out. And we know that young people have a herd mentality, right? If all your friends are going to a sporting event, are you going to be the one or two that stay back because you're worried about Corona? It's going to be interesting to watch it happen. One other interesting piece for us has been the deterioration in how people are viewing travel. Like travel, I think the idea of travel is going to completely flip. We've seen comments on True Public from young people across this country where they're reimagining what the ideal trip is. A lot of them are seeing traveling within the United States as something that's more enticing for them or their next trip. This could be a boom for places like Miami and Las Vegas in more local travel spots as opposed to the ones outside of the States.
That is really interesting, and especially because you are looking at the younger set. How is this going to affect study abroad programs at colleges? You know, a lot of that's still yet to be seen, but great insights. Caven Clausen, CEO of True Public. Thanks for stopping by. We'll have you back for updated results, okay, as you continue to survey the young people.
Thank you.
Jared Blickery standing by now with a closer look at the markets. Not off to a great start here, Jared. A lot of it is because of oil at a 21-year low.
Yeah, it's incredible. Just watching WTI crude trade with an 11 handle and actually just dipping below that into the tens. We have the Dow down about 375 points. Not surprisingly, energy the worst performer here, and that's about 1.5%. NASDAQ outperforming, up down about 0.7%, and the S&P 500 down just over 1% right now. And we can take a look at the VIX trading just above 40, and that is up about 3 points on the day. Had closed at about 38 on Friday. A sub 40 level is improvement here. And then
gotta
also
mark
the
these
10-year
charts,
T-note
man.
here, we have that down
I need to
by
find me
about
some
3
trades
basis
with
points.
this
Had been under pressure last week.
this
And with that,
Forex.
making the value and cyclical plays just kind of losers right now. So here's our Dow heat map. We have Microsoft and Apple both down over 1%. Walmart, you can see they're kind of dipping into the green. Did open up in the green as we saw earlier. But Visa down 2%, JP Morgan down 1.5%. And the biggest losers here, Exxon and Chevron both down over 3%.
Let me look at UCAD. What UCAD talking about?
But we can also take a look at the sectors, and we see that discretionary outperforming. That is 25% Amazon, and then we have healthcare and staples. Those are also outperforming to the downside.
Damn, I missed that too.
Whacked once again, along with real
Oh
estate.
man, I hate missing these,
now,
man.
which had been outperforming, is now underperforming. Alexis.
Just incredible to see crude oil at around $12 a barrel. Thanks for that, Jared. You mentioned Walt Disney, one of the big losers for the Dow, off more than 3% right now.
I could have got him about right here.
Over at UBS.
Matter of
So
fact,
stay
I would
with
have got
us.
him
Much
right
more
here.
Yahoo Finance to come, including Congress saying they're getting very close on a new stimulus bill that could include some more help for small businesses. Again, the Dow Jones Industrial.
No, I'm in all. See, the stocks I'm in for the long term.
Points. We'll be right back.
The stocks I'm in for the long term, but the Forex is like the now. Nah, well, the thing is, it's like I don't really like trading gaps. That's why, like, I used to trade on Sundays, but sometimes I do, sometimes I don't, because I don't like that gap. You know what I mean? I just don't like the gap like that. I mean, everybody got their own opinion on it. I mean, I used to, and then I realized, you know. Because sometimes you'll see the setup, but it'll be just taking forever to move, you know? Not all the time it moves, like, right then and there. Sometimes I've been in trade for days, you know? Let me see. I might just take this one with a small lot size. What's this look like? EJ? I might take this one with a small lot size. Let me see. Let me look.
Welcome back to Yahoo Finance Live. You're seeing the market sell off this morning to kick off the week with due in large part to a pretty large, significant plunge in oil prices. Let's get right to Jared Blickery, who's watching all things markets. Jared?
Yeah, that's right, Brian. We're seeing WTI crude trade with an 11 handle, which is simply incredible. And I'm going to pull up some charts here. First, we're seeing Halliburton down. That's down 1.5% after reporting earnings. And just a couple of notes about that. Although they did beat on both their top and bottom lines, which were very reduced expectations, they're slashing their capital spending. This is a shale oil play, and they're slashing their spending to about $800 million. That's 56%. And that's going to be their first sub $1 billion budget since 2016. And you're talking about the price of crude oil here. We're seeing the May contract, which is rolling off the board today at 11.42. But even June is depressed. Instead of 37% down, June is down 8%. And if we take a look at, let's see here, let's take a look at a chart at the intraday price action. We can see we're getting a little bit of a bounce here. It started just after 9 a.m. But if you look at the year to date on the June contract, still down 59.6%.
All right. Thanks, Jared. Let's bring in Caleb Silver, Investopedia editor-in-chief. Caleb, always good to talk with you. First question is, what are people searching for on your site right now? It's obviously where I've gone for many years to look for investor education. What are people gravitating to at this moment?
We are finding that people have a lot of anxiety. So there's this dual thing going on where they're looking up words like forbearance, foreclosure, bear market, depression. But at the same time, a lot of them are being aggressive and optimistic, and they're looking for opportunities. So even today, we're seeing high searches for the top oil ETFs. I don't know who's buying oil on a day like today, but maybe they see the price falling far enough. They're looking at airline ETFs and casino stocks, even as those stocks absorb the most punishment from this global slowdown. So on the one hand, there's this fear of the real economy on Main Street, what's happening to me, and then there's the where can I invest part of it too.
Hey, Caleb, Alexis here. Bouncing off of where can I invest in all this, what are you finding among younger investors? Are they willing to play this market? What are they searching for? And when they are buying, what is it that they're buying?
Yeah, younger investors have been very aggressive. So there's this combination of blue chip stocks that they're buying and the big tech stocks, which have been leading the market rally. You know that Microsoft, Apple, Amazon, Facebook, all leading the rally. But they're also buying risky cannabis stocks. 420 today, no surprise. But also they're buying some of these stocks that have been down
420 today, no surprise. That's funny,
the
bro.
world, the Chronos of the world. So they're looking for opportunity in sectors that they may have been invested in 2018 and 19, and they're getting aggressive with stocks that have really fallen very hard.
Caleb, do you get the sense, or you're seeing just based on your site, people are going back to investor education seminars?
So this one, I'm gonna set my stop loss to
trade, let's say big cap tech stocks, make a few bucks.
Let's see.
It's a healthy mix. When we see periods of anxiety like the one we're seeing right now, we have actually an anxiety index that tracks investors searching for fear-based terms. So those fear-based terms are depression, bear market, correction. But we also see this opportunistic
and my
side
take
of
profit
is
going to be
ways
set
start
to
investing or put $10,000 to work. Obviously,
0.
the market here has hurt people on different levels.
869.
Remember what happened 10, 12 years ago when interest rates were lowered, when the
7.6.
monetary policy was there, and markets went up 350% over the next 10 years. Not saying it'll happen now, but the memories are short, and people remember what happened last time, so they want to be opportunistic.
And EJ,
Caleb, the anxiety index that you guys have developed, is that a contrarian indicator for the market more broadly?
Well, if you think about it, it's more like the VIX. It precedes movements in the VIX because people come to us to learn about what's going on. What does this mean? How do I interpret a payroll protection program? How do I interpret a bear market? How do I deal with it? And then people usually go and they buy securities based on that. So it precedes the VIX.
Yo, Ron, you there, bro?
It has spiked sort of 2 weeks before the pandemic got out of control, and then it's settled back down a little bit, but it's still at historically high levels, much like the VIX, which was
stop
at historically
loss
high
is
levels
at 116.
maybe until this week. So we see that
557.
the market
My
activity
take profit is at 118.
Caleb, are you seeing a difference between the way individual investors are treating this market versus institutional investors?
All right, y'all, you know how I do it, man. I used to trade on a 15-minute candle. Now I trade on a 4-hour and a daily.
Individual investors have been pretty aggressive. If you look at the online broker trading activity, their buys are outnumbering the sells 2 to 1, even through the worst part of the bear market that we just went through.
This is a good entry for me right
running
here.
to cash. Some of them have been buying.
People can get greedy and go up here all they want. I'll take it here, and I'll be happy with it. I might even come down here.
running the money market accounts
Let's see.
and cash, which are at record levels right now. Individual investors, those that have the ability to invest, are becoming very aggressive and have been over the last 4 to 6 weeks. So they're looking for the opportunity to buy stocks at discounts.
Caleb, do you think now is a good time for an investor to retrain themselves on how to invest?
Oh, absolutely. I think a lot of the rules that we grew up with, at least that I grew up with, don't really make a lot of sense anymore. That said, if you took a 60-40 portfolio through the worst part of this bear market a few weeks ago, you were
The
down
volume
like
is low.
10% versus
It's because I was
20%
talking over
decline
the
in
volume.
S&P. So the balanced portfolio still works. But thinking about what stocks have led the last decade or 2 decades, including the fossil fuel sector,
You know,
that's just not going to work
besides
anymore. The
buying,
stocks that
I
are leading
trade
this recovery are
Forex
the
too,
tech
and I
stocks
buy
that
stocks.
aren't, they're benefiting from the lockdown.
That's what I've been showing you,
there's
man.
a whole new growth of industries that are going to come out of this that we need to get familiar with.
Trying to get these people out here making this money.
Portfolios looking for growth and yield going forward.
The stimulus ain't
enough.
Warren
Buffett's investing principles still make sense. Do they work?
Well, I still think you buy companies you believe in that have good balance sheets and good management. I don't think that changes no matter what. At the same time, we're seeing a lot of vulnerability to a lot of the choices that he made. Look what's happened to the airline sector. He said several weeks ago, I think he said it on Yahoo Finance, that he was not going to sell the airlines. Well, he eventually did. He put a lot of money there. He put a lot of money in Kraft Heinz, which has not done well for other reasons. That said, if you buy fundamental companies with good fundamentals, good sound management teams in industries that you believe in that have growth prospects, I think you're going to be okay. But the world has been turned upside down on us right now, so nothing really makes sense.
Don't wait
for
see what
a
lot of people doing
out of this crisis.
is they're waiting
Caleb,
for
what
the
about that
bottom.
tried
You
and true
never
formula,
know
right? 60-40.
when the
I got
bottom
60
is.
in equities,
So
40%
what you do
in bonds. I've got a long time horizon. I can sort of set it and forget
the volume down
it.
some.
Is that
what you
working
do
anymore? Do we have to more
set
actively manage
support
our
and
money?
resistance zones.
Well, funny, we've
charts.
come out of this period
So
of
support
heavy
and
passive
resistance zones are
management and the growth
zones,
of
or if you
ETFs,
look at the
which have
candles, 'cause
redefined
I look
the
at
industry.
candles, I don't
A
look
lot
at the
of us are
lines.
in 401ks
And you
or defined
see
contribution programs
where
we're
the
just
candle
automatically
tapped
buying the market
multiple
every 2 weeks
times
when
on
we
trying
get
to go
paid.
past it or
That's
trying to
where
go
that
below it.
worked.
And
from
that's how you
2009
determine
until just last week,
on an
or
entry.
until just last month, I should say. So 60-40 has done okay. It's been about
The initial
down
drop
9-10%,
when the price
and
went
it's been a safer
down,
place
nobody
to be.
knew
But
because
if you're looking at
not everybody,
growing your
not
money
every
long
day
term,
everybody
I think
wake
you might
up
have to
to
get a little
hearing
bit
this.
more
This
aggressive.
is the first
But the
time this
stock
ever
market
happened.
is still not done shaking out yet. I think we have probably another lay down and a lot of
So,
volatility till we find the level where we can
I
rebuild. And
marked
that's
some
all
zones that
really
had
about the
struggled to
health
pass,
question, less
and that's
about
why
the
how I
investing question.
determine my entry.
All
I
right,
got in
Caleb
this one
Silver,
yesterday, so
Investopedia,
I'm gonna
editor in
be
chief.
up and
Good to
down
speak
on this
with
one
you.
for a bit, but
Please
I
do
ain't
stay
worried
safe
about it.
out there.
Thank you. You too. Thanks for having me.
Carnival. I've been in
Do stick
Carnival
around.
for
We're
like
driving to a Yahoo Finance
I don't
trending
even
ticker.
know, like a week
That
or
would
two.
be Netflix.
And actually, I got in Carnival at $9, which was down here, and then it shot up to 15, and I sold the stocks, and then it dropped back down. I think it's about right. Yeah, right here. Actually, you can see it right here. It shot up here, and I sold, and it dropped back down, and I bought again. Well, I wasn't sure it was going to happen. I thought it was going to drop even further because of the, I don't know, the coronavirus. So I bought some here, and then I bought some again here, and now I'm in profit. So as you can see, the entry 1 is here, and entry 2 is here. I just picked the green here because I know that if I pass this green, I'm good on both buys, if that makes sense. So anytime you see like green, that means you're in profit. Red, that means you're negative. Disney stock, I've never knew about the wash penalty, so until this stock, that's why they got me. This one and Boeing did that to me, so they got me. Oh, I forgot to mark this one. GE, when the market opened up this morning, it tapped that same zone I was telling you about, like this right here. This is tap 1. This red candle is tap 1. This green candle is tap 2, and this one right here is another tap. So when this one tapped it, I placed my buy right here, and now I'm already in profit. I did this one about 15 minutes ago, if anything. JCPenney is about to go bankrupt, but this one dropped off 24 cents. So this one was more of a what can I lose situation. It's about to go bankrupt, so I don't know what's about to happen. But I just threw money in there just because it was like, what can I lose? What can go wrong? I didn't put that much in there anyway. ExxonMobil, best dividend stock I got for right now. I got in right here. I'm already eating sandwich all day. This one right here is a technology stock. . 'Cause 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 '
Welcome back to Yahoo Finance Live. Now, Washington State's Attorney General is suing social media giant Facebook again over political ads. Alexis Keenan sat down with Washington Attorney General Bob Ferguson this past weekend. Alexis, good morning to you. So what did Mr. Ferguson have to say?
So, yeah, Brian, this is the second time around that the state's AG has sued Facebook for this exact type of violation. In 2018, they reached a settlement of $240,000. But Attorney Bob Ferguson, he cautions that that should not necessarily be indicative of what Facebook should be expecting a second time around. They said the repeat offender laws are much more serious in terms of penalties and fines. Now, here's what Attorney General for Washington State, Bob Ferguson,
don't care,
said
boy.
the
Washington State, boy.
of those
Them boy
fines
don't care
if
about
Facebook
nothing. Coffin
is
or not, they
found to
gonna
be
get their
in
money.
violation again of the state's campaign finance laws. Take a listen. Now, have you consulted with other state AGs to find out if this problem is more widespread than just within Washington State? Of course, we know that Facebook had a settlement it reached with the FTC.
I want to get another entry right here on this yellow line. Even though that's really, I mean, I don't know. I kind of want to because it looks like a good spot, but
for the company.
it's really too close to my first entry. If anything, I should get it right here.
Every state law is different when it comes to what their campaign finance laws are. So what is illegal in Washington?
What's up, Hot Tim? How I play this game? This ain't no game, man. This is the market. Well, this is the market, not a game. That's how you lose your money. Why that emoji? Why you send me that emoji?
Especially high-profile ones. I won't go into details about those conversations for obvious reasons, but I think it is more than fair to say that a number of AGs are watching carefully what's happening here in Washington State with these cases. And one thing I would also add is that anytime we're enforcing our campaign finance laws, our consumer protection laws, if someone is a repeat offender, we take that very seriously. And so the first go-round of them settling for $240,000 should not necessarily be an indicator of what we think an appropriate resolution would be on this second go-round that we're having with Facebook.
So, Brian, here, what the AG is talking about is identifying for Washingtonians who is paying for those political ads, their names, their addresses of the ad sponsors, their names of the candidate that the ad is supporting, and also the measure that's being supported by each ad. As we saw with the Cambridge Analytica scandal, that was really the result that happened, that $5 billion fine against Facebook after so many ads had been identified as having ran on Facebook during the 2016 presidential election and found to have had Russian interference with those ads, not necessarily being paid for by American actors. So he said that so far the investigation is still ongoing, but 269 offending ads have been identified.
And Alexis, how bad could this get for Facebook? I mean, what might the worst case scenario look like?
Okay, so that's really questionable right now. However, this particular law, it allows for up to $10,000 in fines per violation. Problem there is that per violation hasn't necessarily been defined by the state. The court has not weighed in on what exactly that means. But at a minimum, if the maximum penalties were to be assessed against those 269 allegedly offending ads, we would already be at $2.7 million in fines.
Sign right here.
But again, the AG cautions
the market
that
shot
that's
up.
not
It can't just keep going.
the end-all, be-all. And also, of course, he's worried about it. I did ask him about whether this could be more spread than just in Washington State. He's focused there right now. But NYU has also looked into the last year of Facebook ads, and they're finding some inconsistencies as well. So we'll have to really keep watching to see if this spreads beyond just Washington State.
Alexis, are there any key dates
Washington State's crazy, man.
Has to keep in mind with this?
Crazy people.
I think this year, granted, yes, it's a presidential election year, but here we are in the midst of COVID-19 and the response to that. So perhaps not as much attention is being paid to these political ads as has been in the past. At least we know Washington is keeping its eye on it. But yeah, I think certainly investors should take a look and make sure that They are watching not only this case in Washington as it unfolds. As we know, the wheels of justice turn slowly. So I'm not expecting a resolution to this matter anytime soon, perhaps unless there's another settlement. But absolutely, this and could be a microcosm of what we see across the country. And I think as some of the studies, including NYU study, develop, we'll see whether there is more broad implications here and whether this will mean more financial burden for Facebook.
No matter what other stocks
Alexis
do,
Keenan, thank you.
Carnival made sure I eat.
Let's hit a Yahoo Finance trending ticker. All eyes on Netflix ahead of their earnings report tomorrow evening. Let's bring in Heidi Chung, who could run through some of the expectations. Heidi, big expectations on Netflix this quarter.
Yeah, Brian, I'm coming to you actually from LA here, which is of course the entertainment industry capital of the US. But Netflix, certainly one of those companies that actually has seen a pretty big surge, not just in viewership, but also the stock the past couple of months, even as COVID-19 has sort of been pummeling a lot of other corporations around the world. If we take a look at Netflix shares, it's up 30% this year.
I'm not
on the
in
flip
this
side,
one.
the broader
Yeah,
market, the S&P 500 down some 11%. And of course, Netflix hit an intraday all-time high last as well. So this stock has been on a tear. In terms of what Wall Street anticipates when this company reports earnings, Netflix is expected to report adjusted earnings of $1.87 share on $5.74 billion in revenue during its first quarter. A couple of key points here from analysts. First, Wall Street estimates that Netflix added 7.69 million global paid subscribers during the quarter, which represents 17% growth year over year, which is pretty substantial.
Got, man?
Think about it. Last we heard, Netflix had about 167 million global paid subscribers. Second, a lot of analysts saying keep an eye on updates when it comes to free cash flow. Of course, that's one of the things that a lot of people pay attention to when the company reports earnings. Loop Capital analyst Rob Sanderson predicting that with the entertainment industry looking to really halt production amid this outbreak, Netflix will likely spend $2.5 billion less this year, which would make it close to free cash flow positive. So that would be certainly a boost to the stock. Investors would like to hear things like that. But yeah, a lot of expectations going into this report. So it'll be interesting to see what kind of updates we get from the company, especially management.
Hey, Heidi, I've been reading that because they now have sort of the eye of the world on them, Netflix, and the subscription numbers are expected to rise big time during this pandemic, that they have pricing power and that maybe we're going to see them actually raise prices. I would have to think that would be very bad optically to start raising prices when millions of Americans are losing their jobs at a record clip. But what are you hearing? I mean, might we see a rise in subscriber, the amount of money Netflix is going to be charging us?
You know, Alexis, that's a really good question. I think timing would be key when it comes
to
that.
Dividend yield. That's whack. I wouldn't even gotten Delta.
Hit the market.
You better off getting in American Airlines.
Netflix certainly does have pricing power just because it was such a dominant force in
American
the
Airlines is better
wars.
than
But now
Delta.
that we have Disney Plus, not just here in the U.S. but internationally as well, that company reporting a really strong number.
It's not a good
with,
spot to buy though.
Global subscriber numbers.
But
I don't necessarily think that we're going to see any significant price increases from Netflix or some other players in the space in the short term. But the argument that Netflix might have substantial pricing power once again, just because look at the content slate, the timing of a lot of the releases that came out.
There's no dividend yield.
The past couple of months, including Tiger.
The only thing you're getting out of this, like, think about it. All right, so let me break it down to you.
Strong grip when it comes to documentaries.
So remember I was telling you about support resistance lines, right?
Shows as well as scripted content.
I'm not sure what you got in that, but let's assume you got in that $20.
Netflix does not spare any cash when it comes to making sure that they beef up their content category. The fact that they've had to sort of hold back on that, but
which means
able to release new content in this
you can
kind
triple
of
your money.
Shows that they have a lot.
I mean, you know, we're gonna make the assumption that it's gonna go back to where it was,
are really
$60,
not,
which means you triple your money, which is not bad. Don't get me wrong.
When it comes to pricing and raising,
you know what I mean?
Prices,
Triple your money. I mean, it's not bad. It's just like I was telling my sister the same thing.
Long term,
it's not bad. It's just the opportunities.
Heidi, what was your favorite Tiger King episode?
Like, You triple your money, but you get no
really good
dividends
for the
versus.
first 3 or 4 episodes. The
Because
last
what I
couple
did was I got
episodes
in at
weren't as exhilarating,
American
but just
Airlines,
the
right?
fact that the amount of
This
people
one
on social
has
media
dividends,
talking about the
and
series, I'm
I
definitely
got in at $10, right,
hoping
or
to hear management
$11.
talk about how
So
successful it was.
where was this
In
one?
terms of the
And it goes,
numbers,
it triples
they
your
usually
money,
do
and you
highlight
get a
some of the
dividend.
big releases that did well during
That's
the quarter.
just all
So
I'm talking
I'm
about.
hoping to
You know,
hear
it's
a
all
lot
about the
about Tiger
dividends,
King,
man.
Brian.
All right, Heidi
It's
Chum,
all about the
hold up on
dividends.
Tiger King. No surprise there. And good to see you in LA. How'd
I mean,
the flight go?
it depends on how far you're trying to go
The
up.
flight was
Like if
really
you're just
weird.
going up a
JFK
couple
was
bucks,
empty. LAX was empty.
you
The
know,
entire JetBlue flight that I was on was pretty
that's
empty. Only
why
about
when
10
those
to
kind of
15
start with no
people on the
dividends,
flight.
people go, like
But
my
people
sister.
really cautious, wearing masks, wearing
She went for
gloves.
Tesla.
So it was good to
Now
see
Tesla
that,
on
Brian.
different.
All right, Heidi,
Because
stay
that's the
safe.
one you
We'll
can
talk to
ride
you
up
again
without
a little bit.
dividends
You
and
stick
you ain't got to
around.
worry about
We'll
it.
have much more on the market.
Bitcoin was the same way. Remember Bitcoin? That's the same thing. You can ride those numbers up. You don't get dividends, but you can still ride the numbers up. There's a couple of numbers that I'm just riding up, like without dividends though. Like this company right here, the technology stock. I ruled this. I'm riding this one up. I think this one's gonna be like Amazon in the future. They don't have dividends though. I like this stock right here. Zora. The reason why is because this company started back in, let me see if I remember the day. I think it was 2012. And they got on the New York Stock Exchange in 2018. So that was 2 years ago they got on the New York Stock Exchange, right? And soon as coronavirus, I didn't mean to hit that. As soon as coronavirus came in, even though it's a company that's just this new, they bounced from it. You know what I mean? Of course they take the tank because everybody dropped down. And then all of a sudden they came up strong. So if a new company can show me this, that means this company has potential. So yeah, I put some money in it. I put some money in this one. If it drops down and hit another line for me, I'm gonna put some more money in there. I like this stock. It don't have dividends, but what can I expect? It was in the stock market for 2 years, and one of the years, obviously, you know, now with the coronavirus. So, you know what I mean? They can't really have like the first year was kind of a learning experience. The second year was the coronavirus, so you know what I mean? It doesn't really help. But they demonstrated right here that they can survive. So for me, that was good enough for me to get in. So if this stock continues to drop to this support level, remember I was telling you if it tap a couple of lines, like right here,
Welcome
it
back to
tapped
Yahoo
1,
Finance Live.
2, and then
the U.S. is
this
making
one here
progress
is the
on
third tap.
tackling
It's not the
COVID-19,
exact.
which
It's
wouldn't
the
be
zone.
possible without our medical workers
So
fighting hard on the
if
front
it
lines.
comes
Joining
down
us
to
now
about
to
in this
discuss is
area,
Dr.
maybe even
Jennifer
right here,
Ellis, a
I'm
Los
gonna place
Angeles
another
ER
order.
doctor. Doctor, good to speak with you again. Take
I mean,
us through
before it
what
dropped,
you're
it was at
seeing in your hospitals at the moment.
Wait, what chart is it?
Good
Daily
morning.
chart, around
Well, what we're
$16.
seeing is a little
But
bit of a
still,
flattening
you know,
of
they
the
showed me
curve,
a
a little
lot
bit of a
enough
slowing
to
down.
stay
We're
with them.
starting to see
This
some
one's a long
patients at
term
the
for
end
me.
of the course of the disease,
ExxonMobil,
some very
same one for me.
serious
Even though it's gonna
outcomes,
go up a
and
couple
we're also
bucks,
starting to
this
see some
dividends
patients coming in again who have
tastes
other
good,
medical
bro.
problems that were afraid,
Hey,
I
this,
think, to come
the
in
dividends, man.
before.
That's what's gonna pay for
We're
that
seeing
flight
a
in that
little bit
hotel.
less of people coming in just looking for testing. In the beginning, I think when testing was less available, people were coming to the emergency room looking for just testing when they weren't that ill. For the most part now, we're seeing mostly people who are very ill.
And what about the need for ventilators? Do you have the ventilators that you need right now, doctor? And are fewer people being put on them at this point?
Well, at this point, over the weekend, we started to have a little bit of a flattening of the curve and a slowing of deaths. We had only 24 deaths here in Los Angeles on Sunday, which is good. But prior to that, in the few
That's
days
sad.
leading
Like
up to that,
24
we were
people.
having
Oh yeah, there's 24 people
a
died.
pretty
That's not that bad.
consistent
Like,
level of people getting on
damn, that's
ventilators.
crazy, man.
I think at the moment we have
Like it's
enough.
so
There is
sad
some
to the
anticipation that
point
if there is
where
a
when we hear
second
numbers
surge,
like that,
which some folks
we're
are
like, oh, that's
anticipating
bad.
if we
That's not
open
that
up
bad. You
again,
know what I mean? Like
we may be in
a
danger. But
response
right
like
now
that
we
is
have enough.
crazy,
There is
man. Like think
also some
about it.
talk of getting getting
when somebody comes
enough
up and shoot up 8
dialysis
people, we're like,
machines
wow. Like
and
back then,
other
we used to say like,
support
wow, they shot 8
equipment
people.
that we might need.
But now we're
As a lot
talking
of times
about
with COVID, it's not just a question of
24
airway
people
failure
dying.
or
We're
of
okay with it. I
respiratory
mean, I
collapse,
understand
but
where she's
also
coming from.
of renal
I mean,
failure or
you
liver
know what I mean? Because
failure.
we talking about,
This
a
disease
couple thousand people to
has
24,
been
which
very humbling and
I
it can
understand it's
make
better in numbers,
people
but
ill
it's so sad
very
how we can
quickly.
just say
And
numbers
I think New York
good.
has started
Like,
to
oh yeah,
realize that
only
some
100
of
people
the
die yesterday. That's not that
dialysis
bad. Like,
equipment that they have
that's
was
crazy.
not sufficient for the number of patients that were critically ill. So at this point, the ventilator situation is sustainable, but if we get another surge, we could be in danger.
You talk about that second wave, which we're hearing more and more medical folks talk about, that if we come back online with the economy too quickly, it could be even more devastating, the second wave, than the first wave has been, as hard as that is to believe. What would your message be to people who are advising President Trump right now as to when to open the economy, from your perspective there on the ground in LA?
Well, I think the number one thing that is helping and that has been shown to help is social distancing. And I think that I can't emphasize that enough. We also need widespread testing. I mean, there's been so much talk of testing, but quite frankly,
Yo,
we are
speaking of social
still
distancing, man,
rationing
I ate
testing in many
sushi in
hospitals
how
around the
long?
country.
2
And,
months
on the
because of the
platforms
social
that I'm speaking
distancing,
with
man.
doctors on social media, we're still, for the most part,
Shit,
deciding
I don't
to
want
use
nobody to
testing for
call for
those
my
that are the
sushi,
most critically
man.
ill. Now, if we can get serology testing, which is the testing that can tell if you've had immunity to the disease, and that's where all of the hope is now for a lot of the medical community. If we can get that level of testing up, if it can be reliable and widespread, if it can be distributed widely, then we can have some level of confidence to know when we can open up again. The other things that we need, which are very critically important, is we need to protect special populations. You know, what I saw in the last few days in the emergency room were cases coming in from nursing homes, lots of cases clusters coming in from the same nursing homes, not just the patients, but staff who are caring for them. And so if we can't protect these special populations, then this next surge is going to, again, overwhelm potentially some of the healthcare systems. We also need to make sure that healthcare workers have what we need. The PPE, the personal protective equipment that we need. The pipelines are still very erratic. We can't be sure that we're going to get enough masks, enough coveralls so that we can intubate, so that we can protect ourselves. I mean, these things are critically important. And until we have all of these measures in place, I don't think people are going to feel confident enough, even if certain markets are opened up, to go out again and start buying and socializing. And so, you know, I can't emphasize enough how much these things have to come in a coordinated fashion, because if you open up one area, and if you, for example, open up New York and people start traveling again, they come to places where there haven't been widespread immunity, then we could end up with a similar situation to New York here in Los Angeles, for example.
Doctor, based on your knowledge of Gilead's remdesivir, do you share some of the optimism regarding this drug?
I do, and it's not just based on the data that's been leaked from the Gilead trials in Chicago, but also from some of the early data in China. And you know, from the beginning, I was telling my husband, if I get this disease, I want you to push for remdesivir and not for chloroquine, because you know, I think that it's still very early yet, so you have to be very cautious. You can't say that there's a slam dunk that this is going to cure. But in terms of the limited data that we have, there's definitely
I want to buy crude
an
oil.
effect there that we're not necessarily seeing
I
from
really
some of
want
the
to buy
trials
crude
for
oil.
chloroquine. So I do think that there is some optimism there. But again, I'm hopeful for actual clinical trials where we can see data as opposed to just speculation.
Doctor, are you seeing more people now being released from the hospital? Are you seeing, you know, some light at the end of the tunnel, that those who are coming in are not coming in critically hurt and that they're able to leave? I'm hearing stories here in some New York hospitals that more people are leaving now, and they're actually playing George Harrison's "Here Comes the Sun" every time somebody is released from the hospital, as the whole team cheers that somebody else is well enough to leave. What has your experience been?
Well, unfortunately for me, I'm in the emergency room, so I'm most of the part at the part where you first come in, and so there's not a lot of cheering going on in the emergency room. But I am hearing from my colleagues that there is some optimism. There are some people leaving. People are getting better, and we have to remember that 80% of the people who get this disease do get better. Unfortunately for me, I'm still also seeing people coming in, you know, whose wives and whose family members are intubated from the disease, and they're terrified and they're sick as well. I saw one patient who came in after 3 weeks after being diagnosed, and that person was critically ill. So while there is some optimism, I do remain very, very cautious. And I think that the people who are getting better are doing so a lot of the time because of the critical efforts of healthcare professionals who are putting themselves on the line for this. So while I do share the optimism, I am very hopeful that if we do open up again, that we can maintain some of these precautions in place so that we can treat this without, overwhelming our healthcare system.
All right, Dr. Jennifer Ellis, Los Angeles emergency room doctor. Appreciate everything you're doing, and of course, please do stay safe.
Will do.
And stick around. We'll dive into the markets, which are selling off to kick off this trading week. Straight ahead.
Damn, they won't let me buy this? This is so whack. They don't want a brother to eat. That's what it is. They don't want a brother to eat. That's what they do. Damn, man. Damn, man. This would have been a good entry, too. I wish I know how to do this. I gotta look this up, man.
Welcome back to Yahoo Finance Live. You're seeing the markets selling off to kick off this trading week. Let's get right to Inez Ferre, who's watching, well, a whole bunch of stocks. Inez?
And Brian, right now we're looking at the Dow that's down more than 350 points. You can see some of the Dow components that are in the red. Most are in the red except for Walmart. Let's take a look at a couple of tickers that are moving this morning. Gilead is relatively flat right now. This is after it was downgraded at BMO Capital to market perform. It's trading at around 83, almost $84 a share, but the price target at BMO for this share, for shares of Gilead are $79, with the analysts highlighting enthusiasm around its potential treatment for COVID-19 that's been tested in Chicago. But really, these results are anecdotal, according to the analysts, saying that there's still uncertainty about the drug's commercial opportunity. Novartis is relatively flat right now, also up about 0.6%. This is after the company said it's starting phase 3 of its clinical trial of hydroxychloroquine in hospitalized patients with COVID-19. It'll start these trials in about a dozen sites in the U.S. And then Co-Diagnostic, this stock is really surging today, up 13%. This is after the company said sales for its COVID-19 tests continue to grow. This is after the government now has shifted really responsibility to the states to increase testing.
Anybody invest into oil yet?
Its use of approval, emergency approval for its test on April 3rd. So far, these tests have been gone to more than a dozen states and also received orders from more than 50 countries for these tests. And you can see year to date. Take a look at that stock. Brian?
All right. Thanks, Inez. Many investors are eager to restart the U.S. economy, but could doing it too soon lead to more damage than good? With us now is Stephen Moore, an economic advisor to President Trump. Stephen, always good to speak with you. Thanks for taking a few minutes here this morning. You actually, I believe, argue that the administration is late in restarting the economy. Why, and why restarting now would be the right choice?
Well, we should have probably started a couple of weeks ago in terms of getting the economy open in areas that haven't been heavily hit by the coronavirus. Let's not forget the coronavirus is an urban disease. It's about 12 or 13 major urban areas that have been hit with the vast 90% of the cases. So there are whole counties in the United States that are pretty much unaffected or just very minorly affected by coronavirus. So we should certainly get those areas open. And obviously you need to do this in a way that protects the most vulnerable populations. We know about 80 to 90% of the deaths are people over the age of 75 and people have chronic conditions and some other health problems. So we should be certainly keeping those people separate and then opening up other parts of the zip codes and counties that it's safe to do so. And I believe that is going to start this week in several states like Texas and Tennessee and Idaho and some of those red states.
But Stephen, you're getting a lot of criticism for what you're saying that, we should start opening the economy sooner rather than later. Shouldn't it really be based on science here? Should the doctors, right, be telling us, hey, look, it's safe enough? You're talking about states that might not have big coronavirus numbers, but don't we run the risk if we come back online too soon, that those areas could become infected and this thing's going to balloon again?
Well, it's mostly places with a very heavy, concentration of people. That's the way it is with every pandemic that's hit, that's hit our country in the last 150 years. These are major urban areas that get negatively affected. And by the way, I live in one of those at Washington, D.C. and obviously New York. I travel there twice a week, or I used to. I'm not doing it now. So we ought to be smarter. But you're right about the science. We should obviously pay attention to the science, but we should also pay attention to what's happening to the American society. The least among us, the people at the very bottom of the income ladder, are just being destroyed by this. Small businesses are being destroyed. We have 23 million people unemployed. If we keep locked down till the middle of June, as my not so smart governor in Virginia is talking about, you're going to have 40 million people unemployed. I mean, at what point do we say, wait a minute, we are destroying our society. We're destroying the livelihoods of people. You can't have a society without people producing things. So we have to, what I'm arguing for is be smart about it, be very targeted about it, and let's get up and running, because the economic, we're talking about a potential Great Depression that could last a few years. I think a lot of Americans believe, gee, when this is over in 4 or 6, 8 weeks, I'll just go outside and it'll be just like it used to be. And it won't be, because you'll have so many businesses that have failed, and it's going to take a long, long time to get the economy up and moving again.
Stephen, isn't being smart about it having the timing right? Meaning, we had a doctor on just before you. I don't know if you were able to hear that segment, but this ER doctor in LA was talking about how important it is to have that antibody test to understand who has immunity before you start to unlock parts of the economy. Is that a key part to reopening the economy in your eyes?
Look, I'm very respectful of people with health and medical knowledge that I certainly do not have. So they're providing us with the best health information. And what I'm an economist. What I would say to these doctors is, I agree that it would be a wonderful thing if we had all the testing, we had treatments, and we had vaccines, and we all want that. I've heard some people say, even a couple of governors saying, maybe we should wait till we have vaccine. I mean, that's obviously absurd, right? That would be, we wouldn't have an American society left if we did that. We would destroy the economic infrastructure of our country. So we have to calibrate the economy, and we have to calibrate the health risks. And that's where I'm saying we be smart about it. And I think we should also consider that every day that this is like, everybody's familiar with the charts of the spread of the virus, that it goes geometrically. Well, that's what happens with the economy. It's not a linear relationship. Every day we keep the economy shut down, the damage gets so much worse. And yes, I'm concerned about the body bags. What is the number now? 40,000 or so people have died. We're going to see body bags of small businesses that have been destroyed and that can never be resurrected if we don't act quickly.
Stephen, you mentioned just earlier the D word, depression. Do you think we're in a depression?
The D word.
What does the economic recovery look like if you do think we are in one?
So that's a great question. What I told the president is, I'm on a part of his economic task force. And when I spoke to him last week, I said, if we could, this is, apropos to the question that was just asked about why it's so important to get things open quickly, because I do think if we can get things opened on a rolling basis starting now, this week, and at the latest May 1st, I really think by late summer, we could potentially start. The summer is going to be a disaster. No, under any scenario, this summer is going to be really brutal. But I do think you could start to see by late August, early September, the signs of a recovery where people feel better about things. But if we wait until June or July, you can write off not just 2020, but the first half of 2021. I mean, you're talking about real devastation. So that's why I've been such a bull on getting the economy open quickly, because really, I mean, it's just heartbreaking. And you see what's happening with the food lines, with people at the Salvation Army trucks in some cities a mile long. I mean, we're facing real deprivation here that is doing significant damage, and the human toll is growing with each passing day.
Hey, Stephen, you recently compared those who are protesting against these social distancing efforts to the iconic Rosa Parks during the civil rights situation. You got a lot of criticism for that. Would you walk back those comments at all? Or you still stand by them?
Well, Rosa Parks is someone I wrote the reason I mentioned Rosa Parks in my comments to some of these protest groups is I think I agree with you. She's one of the great iconic figures. She's a hero of mine. I wrote my senior thesis on civil disobedience in America. And I talked about the great, David Henry Thoreau and people like Rosa Parks who brought about social change by protesting injustice. And I believe there's great injustice going on a lot of states where I've talked to religious leaders, they're shutting down church services on Easter Sunday. The idea of people spying on their neighbors, the idea that you've been denied as an American your right to make a living and to run a business. I mean, those are real fundamental civil liberties that are being violated. And what I'm trying to say is, people who are trying to protest against these violations of our rights, because we all agree that our rights are being, pretty trampled on in a way that I never thought I'd see in America, that people should take to the streets in a safe way. One of the things I've told the protesters, and I'm not running these protests by any means, they're spontaneously combusted all over the country, is do it in a safe way, do it with social distancing, do it with gloves and masks, and make sure you're protecting your health and the health of other people. But it is really so important, in my opinion, that people around the country in states like Michigan and Wisconsin and Colorado, where the rights have been violated, that people have their rights, have the right to protest.
All right, let's leave it there. Stephen Moore, economic advisor to President Trump. Always good to speak with you. Stay safe out there.
Thank you. You guys too. Thanks for having me.
And do stick around while much more in the markets straight ahead.
Let's see. On the flip side, about all my stocks is in the green except for 1, 2, 3 stocks, which means that's not bad. Well, let me guess I have to tell you how many stocks I have. Let's see. 1, 2, 3, 4, 5, 6, 7. So 4 of my 3 stocks is in the green. Which is cool because today is a red day. Today is a red day. It's not bad when it's a red day and everything look good. American Airlines. Nothing but red right here, boy. I'm going to be patient on this one. I'm gonna place an order right here, though, because it's tapping that line. Those 3 lines. So, when I get about right here. Nah, I don't know. Let me see. I might place an order right here. We'll see. See, Carnival is struggling to pass a certain mark, but it's okay. Then you got Disney being stank. See, what happened about Disney is I got into Disney at... Where did I get into Disney at?
Hello. Welcome back to Yahoo Finance Live. Let's get Yahoo Finance trending ticker. Peloton shares under pressure, down about 5%.
I got in Disney around
I know
this
Heidi
price,
Chung is
107.
closely watching this
Somewhere
name.
around
Heidi?
here.
Brian,
And I
Peloton, another
sold
one of those
about
stocks that actually got a boost amid this COVID-19 outbreak.
somewhere
Like you
around
said,
here. I
though,
sold
we got a bearish call on
because
Wall
of the
Street, so the
COVID
stock
stuff.
is down about 5% this morning.
And I sold about right here, and then I bought some somewhere around another. So I bought some somewhere around here, and then I sold it when I saw it was crashing again, and then I bought some more, and then that's why they did something. They gave me a penalty. I didn't know that you get penalized if you sell a stock less than when you got it. So what happened was I bought some right here at 96. So they gave me some at 96 and the other at 122. I thought that was stupid. So it's all right though. It's all right though. They got me.
It's proven. It is not hard to argue for further downside here. The analyst, though, also noting that he does expect strong stay-at-home related second half sales, though. But the big overhang for Peloton investors is how this company will fare once everyone comes out of the lockdown that's been mandated across the U.S. So that's definitely a big question going into everything.
All right. Thanks, Heidi. Now, the coronavirus is affecting millions of people across the U.S., including our next guest. He's a familiar face to all of us here at Yahoo Finance, Peter Tuchman, a floor trader at Quattro Securities. He's recovering from the virus. Peter, always good to speak with you. First and foremost, how are you feeling? How are you feeling right now?
It's good to see you guys. Thanks, everybody, for having me back. I'm definitely on the other side of the of COVID right now. There's some collateral damage, which I'm recovering from, fatigue and some other issues, but I'm definitely on the mend. Thank you.
Peter, Alexis here. I've been watching your stories on Instagram and Facebook. I've been following you. I think it's such a service you're doing by really documenting what this virus has been like for you and how you've had to kick it. Now, through all of this, and things were pretty bad for you. It was looking pretty dark for you at one point, right? I mean, were you ever admitted to the hospital? What was sort of the low point for you?
That dude had corona.
So the low point, I was really very privileged and lucky to have an amazing group of doctors around me. Stock Exchange gave me some doctors. I had my own personal team. And so I was lucky that way to be walked through the really dark points. You know, when at 3 a.m, you have 103.7 temperature and you really feel like you want to die. And the doctors are telling you, as long as you have the ability to breathe, stay home, you're better off there. And so those were the low points. It really, the disease, the virus had really attacked every part of my body. Temperatures were bad. You know, I was really disoriented. And obviously, in a normal situation, I would have gone to the hospital. But taking into account what was really going on in mid-March in the hospitals, as is probably still going on now, I was probably safer to be home. And so that ability to communicate with the doctors for me, which was a privilege, kept me home, kept me safe, and I believe it kept me alive. So I really felt it was important when I see the tens of thousands of people who have recovered or in the midst of experiencing this disease, who did not have the privilege of being able to speak to doctors all through it and are at home and scared and have lost loved ones and just don't know what to do. To tell them my story so that they have some identification to give them some frame of reference what to do and give some comfort level.
Tell us what you did do. I mean, a temperature of 103.7 is really scary. Were you given medication?
That's crazy.
What you
Think
did
about
to
it.
the other side.
This man was 103.7 degrees. Like, if you think think about it. Just think about it. When it's 78 degrees in your house, and your house is hot. When it's 80 degrees in your house, it's hot. Obviously, if it's 90 degrees outside, it's hot. This dude was 103. Like, how do you fix that? You can't, you know what I mean? That's inside his body. You can't. What you gonna do? Go in the AC? Go in the ice box? It's a strong guy right here. His name is Peter Tuchman. And he's elderly, and he fought coronavirus. He knows what he's doing.
Isolated my home. My family was elsewhere. Temperature was bad. I had, my skin hurt. I had severe attack of
Don't give us medical advice, please. No.
So literally,
I'm not giving nobody medical advice.
to
You know, the
navigate
only thing I can
through it.
say is
I
you better drink
knew
some ginger ale.
that if I stayed home and I just hunkered down, that I would be okay as long as I could breathe. And that was the basic, you know, the miracle of it. And the story that the doctors were saying, because Peter, stay home. You know, if we bring you in here and we put you on a respirator, it looks to us that it doesn't end well. So I was lucky, and I never did go into respiratory distress. So that was a great thing.
Pete, obviously the New York Stock Exchange floor is closed, but having gone through this disease, are you rethinking about going back there and working on the floor?
No, of course not. You know that for me, it's my home. It's my life. It's not really a job. It's something I love to do. And gauging from how the disease has really spiked in the United States, I think the few cases that we did have on the floor of the stock exchange was a testament to how well we were protecting our traders and whatnot. I would hope that, you know, I'm not clear about what it's going to look like on the other side and how we roll out the new life we're going to lead and how we're going to go back into opening the economy. But I think the exchange, obviously it's run okay without us. I think there'd be a greater confidence if we were there. I've heard that from people all over the world. Obviously, it's been Stacey Cunningham, our president, and a number of other people have voiced their opinion that they feel it's a must to reopen, and I believe we will do that. I have no qualms about going back there. Obviously, we're going to have some social distancing, and there'll be a learning curve on how to protect ourselves in an environment where there are so many people, but I believe it can be done.
Pete, Ines Ferre here. So great to see you on the other side of this. And really looking forward to also working you back on the floor again. Stacey Cunningham, the president of the stock exchange, actually just weeks ago had talked about this possibility of testing for antibodies, testing people before they go in. Of course, Andrew Cuomo, this is a big part of the plan for reopening the economy. How do you see that playing in as once the stock exchange opens up again?
So look, we have a specific, you know, if we take away all the guests and all the people who come in as transients on a daily basis, because it is the great financial institution it is, and we have IPOs and there's news and all that stuff. For the beginning of the rollout of opening the economy again, if we take the stock exchange as sort of a microcosm and we know who the employees are, and we sort of roll out a small skeleton crew and we test everyone, there are obviously some tests now that can actually have the test results quite quickly. And if you take your core group of traders and DMMs, market makers, who need to be there on a daily basis, and you test them, and then you protect them in a way, whether we use masks or whether we use face shields or what, I'm not really sure what they will use, then I really think we can slowly grow this back into the place that it used to be. And I feel confident it can be done.
This is a week.
And I really appreciate
This is a
Stacey's
week.
stalwart,
Stop.
standing firm on the fact that we will reopen.
This is a
It's
real
just a
weak
matter
stock
of time,
right here.
and as soon as we can, we will. So,
4
and
cents
I believe,
per share.
I'm just one guy on that floor. You guys know me maybe, but it's an incredible group of people. We've been together for many years. The floor itself is a real family, and so we need each other, and it's a community that instills confidence in investors who watch us on a daily basis. So I'm anxious to get back there. It'll be good to see you guys again, and I'm sure it'll happen pretty soon.
Hey, real quick, before we let you go, Pete, you tweeted out this morning something about Shake Shack, the fact that they got the $10 million in small business loans and they're going to give it back because they got hit with so much criticism. What are your thoughts on that? What went wrong there?
You know what? I do have an opinion on it, because as I'm watching this small business loans sort of dry up, and I know they're going to try and increase them, but you're seeing companies that, originally when we talked about this giving money to companies that were hurt by the virus and the shutdown of the economy, obviously Boeing was the first one that came up. And then people started, really started talking about the fact, well, a lot of Boeing's problems started way before the virus. A year ago, January, Boeing was trading at $430. And then the stock got really torn apart down to about $100 before the virus hit. So at what point do you value how much money you really give them as a bailout? So I think it's really important at this point. There's obviously not an unlimited amount of money that we can give out as a stimulus package. And if the numbers are right, I read yesterday that 48% of the United States employees are in small business. So it really seems to me that, and I really appreciated what Randy and Danny did this morning by doing that, is because you've got public companies that do have money in the bank. They do have some part of a cushion. But you've got restaurants and small businesses throughout New York City and throughout the United States who may never open again if they don't get the lifeline that they need. And I really think it's important that companies that don't need it, don't take it. Or, if there's a limited amount of money, we dole it out in a way that really to preserve small businesses in America. Can you imagine 3 months from now that if 6 out of 10 restaurants that used to be in your neighborhood will never open again? Well, that is a whole part of our economy and our society and the population, whether it's the people who are the delivery guys, whether it's the waitress staff, waiters and waitress staff, people who live on tips and whatnot. So I think I thought it was a great move. There was some banter on Twitter the other day. Why is Ruth Chris, a public company, getting money, right? Yeah. At the end of the day, I think it's really important to look at that and see really who needs it, and how the government decides, right?
I'll leave it there. Peter, yep. Thanks so much, Peter. Always good to speak with you. And I'll just, for me, having followed your career and listened to you for many years, it's good to see you safe, healthy, and we'll talk to you soon.
It's so great to all see you through.
ExxonMobil was a good stock.
Thank you.
All right. Thanks so much, Peter. And do stick around. Much more in the markets straight ahead.
Good dividends. For those of you who didn't see, I showed earlier. $3.50 per share. That's not bad at all. I'll take it all day. And then, of course, before the decline, it was between 80 to 75 bucks. Even more than that. So you can eat all the way up and then get your dividends on the back end. I'll take it. Nothing to argue about. Nothing to argue about at all. And if I pull up the monthly chart, let's see. It's been up to 105. So, yeah, I'll take it all day. So I guess it's been this high. Wait, when am I seeing you in high school? So I guess when Obama was in the chair, it went up. And then when he left the office, it kind of started to decline. What stock should I buy as a beginner? As a beginner, depends on how much money you want to invest. American Airlines is a good one because it's real cheap, still at a low. Let me see. Let me pull up the daily chart. American Airlines is a good one. It's real cheap. It's still really low. I marked this one up because I even got into this one. So based off this stock, the low was what my first mark right here, which is my first entry, which was good. And then the next place
Welcome
to buy
back to Yahoo
would be
Finance
right
Live.
here.
And this week
But
is
you don't
starting
know if
off
it's going
with
to
a
go
pretty
back down
sizable
here.
market sell-off. All eyes.
You don't know if it's going to go back down here, so you don't want to take that risk. So let's say you want to spend $100. I'm giving out a random number. If you're not sure, you can put 50 here, and if it comes down here, you can put 50 more right here. What's going to happen is let's say you put $50 here, right? What's going to happen is if it comes down, you're going to go into drawdown, right? You're going to be in the negatives, and then right here, you're going to pay another $50 here, right? And then when it comes here, you're going to be positive because it's going to hit your net neutral. And then when it comes here, you're going to be positive because of this trade that you got in right here, if that made sense. So, and then you can ride it all the way back up. American Airlines is a good one because you can double your money. Pretty good with this one. American Airlines is a real good one. Now, my best one is Carnival. I don't know what a good entry for this one because, as you can see, it's been consolidating between these two lines right here for the past couple of days. But even if you catch it here at $11.30 something, that'd be a pretty decent entry. Carnival's a real good one. Why? Because as you can see, like I said, if you get in at 11, that means if it comes back up to $50, that means you basically times 5 your money, if that makes sense. You know, you times 5 your money. Not only that, it pays dividend. Well, they suspended their dividend because of the coronavirus, but before the crash, I'll pull it up right now. Before the crash, they had a dividends of $2 per share. So I mean, yeah, they suspended it, but everybody knows that's temporary. That's temporary. So, I got like I said, I got in this one like around $9, and I bought a decent amount of shares. So not only you'll times 5 your money, but you're gonna times 5 your money, and get dividends along the way. That's a real good one. It's also the largest cruise company in the world. The only reason why it tanked that bad was because it was a Diamond Princess, and Diamond Princess is Carnival. So yes, you took an L. You took an L there. I paid attention to a lot of the news, before I bought some of these stocks, and then not only that, I marked it up. Carnival's a good one. You just got to get the good entry. I mean, now it's good if you're okay with being in drawdown because of the coronavirus. But even though now is still a real good entry, because we all know that people are gonna go back on cruises, and if people are scared of going on cruises for a while, they won't be scared to go on planes. I mean, we know that, right? We all know that. Disney's another good one. Why? Um, Disney's another good one because well, Disney, the theme parks are closed. That's why it crashed. Plus, they're gonna have Disney Plus. Plus, ESPN is ran by Disney. Plus, they're coming up with a new Star Wars movie. You probably want to get a good entry on this one though. If you want to invest into this one, obviously it's 103 per share. That's the only thing about it. But the dividends, I think this one had pretty good dividends as well. I'll tell you right now. $1.76 per share. Yeah. So this one's more of a long term one. But if you want something pretty good, my best one would be GE. Well, I caught this one at a good time, so I got lucky on this one. But I think another good one would be, and this is just my personal opinion, by the way. So, another good one. Let me see what this one looks like. See, this one hit my net neutral, so I'm good there. ExxonMobil. Why? The two best oil companies is Exxon and Chevron. Why didn't I get Chevron? It's because I missed the entry. I'm learning how to be a really good trader, and one thing that I've learned about trading is it's all about the entry. You know what I'm saying? So my entry point here would have been around these two yellow lines. That's why I marked it, and it didn't go back down. I didn't touch it. Simple as that. I'm not even gonna argue. This one right here. This is a long-term stock. I got in. I marked more lines because if it touched those lines, well, not this yellow line, but if it touched any more of these other two yellow lines, I'll get in again. But this one's a real good stock. Why? Because, obviously oil is always going to be a big thing. You know what I mean? But depending on the president, it's going to determine how the price looks for oil. That's why I was. Let me see if I pull up the monthly chart. That's why I was showing you earlier. If you was paying attention, when we had. Let me see. Okay, so I graduated high school in 2010, right? So about right here. Well, May 2010. Well, it was actually 2011. I graduated 2010, but the president hit his chair until 2011. So that's what they do. They don't. And when Obama was in the office, the price of oil went up, right? And then when he left the office, the price of oil started to decline. But even though the price of oil started to decline, it's still a real good spot that you can be at coming from here. You know what I mean? So even if it comes back to the low part right here at $70, you're still looking at green. Not only that, the best part about it, I didn't think twice about it. I can care less about the upside. I love the upside, coming up on the upside. But the best part in this stock, dividends. Love it. $3.48 per share. So think about it. If you buy 100 shares, right? That means you'd make 300. Of course, this price goes up, as time moves on, the price goes up. So that means you would make 348 extra bucks per year. But not only that, you'll make some on the upside coming up from the price of the stock increasing as well. This is another good one right here. I love this one.
We're going to see oil trading back to 2022, wherever the June contract is right now. But that being said, we are probably going to start seeing a lot of consolidation in the space here, and a lot of companies, either filing for bankruptcy or just getting taken out in the space because they absolutely cannot exist at these levels, and CapEx is going to zero.
Hey, Scott, Julia LaRoche here. You're just talking about the rollover that we're going through right now and that prices would presumably go back up. I guess my question for you is, just thinking beyond what's happening within the oil markets, how does this translate even to the broader market, the equity markets, anything that we should be paying attention to there?
Well, outside of just the energy space, the consumer
Hopefully I answer your questions on what stock to buy as a new.
However, we were talking about this off air. If you go to the gas pump and you see gas traded, for $1.20 a gallon, $1.30 a gallon, whatever it is, what does it really matter at this point? Because people aren't using it, right? I've traveled, probably 100 miles in the last 4 or 5 weeks. So in the broader market, this is not really a good thing. People have talked about how this could be looked at as a tax rebate or a stimulus because the price of gas is so cheap, but it's not really happening because people aren't using it. So this is just not good for the broader market at all when people want to look at it and say, all right, well, I'm able to save my $30, $40 a week, and use it elsewhere. That's just not happening.
All right, Scott Bauer is the CEO of Prosper Trading Academy. We really appreciate your being with us here on Yahoo Finance as we try to figure out where we all go forward with COVID-19. Want to bring back a friend of the program, Scott Galloway, who is a New York University professor of marketing. And Scott, there is so much to talk about between the PPP program, the FANG stocks, but I want to jump into something because I started my career in traditional television, and you have a dire prediction for broadcast outlets and television going forward as to what's going to happen to some old world media, but also some new world media. So where do you want to begin? Advertising has fallen off a cliff, at least for old media, right?
Yeah, well, there's, COVID-19 isn't as much something that's going to change everything as much as it will accelerate it. And there's a basic truth that we've been ignoring for a long time. And I say this as someone who's made a nice living preaching the principles of brand strategy, and that is advertising sucks and people want to avoid it. And people don't want a 30-minute gorgeous piece of content from Modern Family interrupted by 9 minutes of commercials telling them how old it is, how terrible it is to get old, or personal injury attorneys. So now technology has enabled anyone with any money to basically avoid advertising. So advertising has become this tax that the poor, the technologically illiterate have to pay. And moving through this crisis, you could almost create a survivability index based on one thing, and that is the percentage of revenues you get from subscriptions. So Viacom gets hit hard. Surprisingly, the New York Times, with about 2/3 of its revenues now coming from subscription, does okay, but there's just no getting around it. Don Draper has been drawn and quartered. The heyday of
Did I answer your question though?
and
I hope I
advertising,
did.
those days are over. Advertising is going, and ad-supported companies are going to come out of this much, much weaker unless they have the scale of a Facebook or a Google that will emerge from this even stronger.
Well, even when you're talking about a Facebook or a Google, Scott, I mean, the days of Mad Men, we could argue, have been past us for a little while here with the rise of things like programmatic advertising.
ExxonMobil treating your
For
boy
me,
good
the relevant
once
question
again.
is, what
See
does
that come
it
back up?
do to a
See,
Facebook or a
man,
Google? How
boy,
much destruction is there for
got
that
back in
business,
there. It's
which
all
looked
good. It's
like
all
such
good.
a
I can't get
fortress
greedy.
going into all of this?
That's the one thing, man. You just
No
can't
doubt
get greedy.
they're hit in the short term. So the keyword bidding and average
Can't be
prices
greedy
on
in these
keywords and
markets,
advertising
man.
in Google off anywhere between 20 to 40% in the last 30 days. That will
Can't be
absolutely
greedy
show
in
up
these
in their
markets,
numbers.
man.
But what you're going to see, Julie,
You
with
get too
the
greedy.
business
If I
of
get too
Facebook
greedy in
and
these markets,
Google
man, I'll be
is it's
calling
going
my
to
daddy,
create the shape that the
asking him
president
if
is
I can
hoping
come back
is
home.
going to be reflected in the
I
larger
done messed
economy, which
up,
will not
lose all my
happen.
money.
And that is, it will be a V. And that is, the drop will be violent, but the rip back up will be equally violent, because just as everyone else is playing defense, and firms ranging from Vox and BuzzFeed to Condé Nast are furloughing workers, you're going to see, I'm seeing it personally, Google and Facebook are actually hiring, and the team of the best players wins. You're going to see Google and Facebook, their tear back just be extraordinary here, and they will return. If they don't, the ad market will not return probably to pre-corona levels, but you're going to see Facebook and Google probably go from 61 or 62% to maybe even the low 70s. So while they're hurt in the short term, in the long run, they just consolidate power. Most specifically, what's taking place below the surface of the water here, Julie, is they're soaking up all the human capital. Who are the best people at Condé Nast and BuzzFeed? Simple. Look who's working at Google next week.
Scott, there is a movement to try and get Congress to allocate funds to help bail out some of the media companies. We've already seen that with the Paycheck Protection Program. We expect to get further funding today. Then there's the headline from Shake Shack. They got $10 million. They pointed out that each store restaurant has roughly 45 employees. But the perception nationwide was so horrific that they had gotten this money that they're going to return, or not accept, at least the $10 million that they're supposed to get from their bank via the PPP. Do you have thoughts on this kind of measure and the PPP program itself?
Yeah, what's happened with Shake Shack, take that times 1,000, and that's what's going to unfold over the next 6 months as we look at the helicoptering and socialism turned cronyism that is these rescue packages, which are nothing but thinly veiled bailouts. I want to be clear. This is a crisis of historic proportions, you would argue.
Let me check.
And we need to, but in general, and I have this viewpoint on boards when we're talking about a decline in business, I don't think you can protect jobs, you can protect people. And we have some bigger questions to answer, and that is, how in America, the wealthiest country, have we put 50% of our citizens in a position of such extreme vulnerability that they are panicked by potentially losing 4, 8, 12, even 6 months of salary? All of these packages, in my view, we should be taking a more European approach where we put money in consumers' hands. But why do we have small business and banks in the middle here? An 11-year bull market is just as historic as a pandemic. Quite frankly, these firms should be laying off people, and they should be getting to their fighting weight so they can reemerge from this smarter, stronger, faster. The notion that I was on a call with my college friends from UCLA. We've all been blessed. We've all done exceptionally well. I was the only person on the line that hadn't applied for PPP. These bailouts are nothing but cronyism disguised as capitalism. We need to protect people, not jobs.
That might be better, right?
Professor Galloway, it's Julia LaRoche. I'm seeing some reaction just on Twitter about, even Harvard getting some of the federal funding. I'd love to get your reaction to that. And then you're talking about this acceleration. What is the acceleration when it comes to higher education? We're talking about $1 trillion plus in student debt that's outstanding. What's even the value proposition of college going forward, especially some of these debt-laden colleges?
So no industry other than healthcare has raised its prices faster than education, and I'm part of the problem. We have become drunk on exclusivity. When you have the head of Harvard admissions saying that he could double the freshman class at Harvard without sacrificing inequality, the correct question is, well, with a $37 billion budget, why wouldn't you? And what we're about to see in education is the disruption that we've been predicting for decades as parents see via Zoom classes that paying $68,000 for their tuition and what is actually going on in universities is no longer worth it. You're going to see a massive consolidation of the most powerful players aided by big technology, and you're going to see an incredible destruction among the second and third tier universities who have benefited from a cartel that is education. Fordham charges the same tuition as a Columbia or an NYU. In every city, we have a duopoly, whether it's San Francisco with Stanford and Berkeley, Los Angeles with USC and UCLA. And these organizations, we are going to see a massive disruption, and it couldn't happen. You know, we have stuck our chin out in higher education as we realize, I mean, you're seeing it just across parents with kids who are saying, am I really going to pay $38,000 for bad Zoom classes, just even in third grade private classes, much less what they're paying for in graduate schools. So we're going to see a lot of universities not reopen and fall because of COVID, but a lot of them will never reopen. We are about to see finally disruption in higher education that we as academics who have decided we're luxury brands now as opposed to public servants, we have stuck out our chins, and these fists of stone called COVID and big tech and the best universities are going to partner. MIT is going to welcome 30,000 students to campus, not 3,000 within 10 years, and that's going to cause tremendous price pressure and disruption, and it couldn't happen to a nicer group of people.
Well, but Scott, at the same time, I would push back against that a little bit, because were people paying this money to the elite universities because the education their kids were getting, or because the connections it would give them? And it seems like those connections are not necessarily going away. And I would expand that question to say,
turn my mic up.
There is so much sort of navel gazing and self-examination being done right now about what's going to change after. And then there's pushback against that. Are things really going to change that much after? And I wonder if that's true for universities and a lot of other categories.
Yeah, you're right, Julie. It's not, people aren't paying $68,000 a year for education. What they're paying for at NYU and at Stanford and at the University of Texas, what they're paying for is certification. And that is really the key value add happens before the kid shows up to campus. And that is once your child is admitted to the University of Texas or to Berkeley, our system has decided they are now have been accelerated into the upper echelons of what is a caste system that it's largely dictated by your college degree. And rather than expand the number of seats as Germany and Canada have done, we've decided we want to create a set of luxury brands such that we can continue to offer more to the children of rich people. People think this is a meritocracy. No, the US is a caste system, but instead of the arbiter being your family name, it's where you graduate from college. So that needs to change. And I do think it's going to change. Unfortunately, the big beneficiaries here will likely be the strongest brands in education. The strongest brand in the world is not Apple. No one gives $100 million to put their name on the side of a building on Apple's campus. The strongest brands in the world are Harvard, Oxford, and MIT. These were built over centuries. They've preyed on the hopes and dreams of middle-class parents. We deliver I deliver a class $7,000 per student. So it's got to be 95 or 97 points of gross margin there. Show me any product in the world above $1,000 that gets a 97% gross margin. We need to begin taxing endowments that don't grow their freshman class faster than population. They're not public servants. They shouldn't get tax deductions. They're luxury brands. We need to abolish tenure. We need a class trader. I work with one of the best faculties in the world. A third of them should be put on an ice flow. And incompetence in graduate education translates to debt on young people who are forced to get married later, form households later, not take business risks. One of the moral bankrupt parts of our society is how much we are charging young people. It is time we massively, a Marshall Act kind of expansion of freshman admittees, and similar to Germany and Canada, great kids get a chance to go to good schools, but we don't have a casting with luxury brand schools and everybody else fights over mediocre education at a ridiculous price.
Scott, as I listen to you talk about a caste system in the United States, I can't help but wonder
All
what
right, I
good
turned
is
it up a little
having
bit
a
more.
six-figure
I didn't hear
salary
you
and
first
a
time.
escape home in the Hamptons when you're dependent upon grocery clerks and truckers and the people at Amazon to deliver the goods you need to survive. And I'm curious, as we go forward, will the salaries for those people come up, but also Amazon? You predict Amazon is going to be the first $2 trillion company as soon as 2021. Tell us more about that.
Yeah, there's a lot there, Adam. So one of the wonderful things about this crisis is I've been watching all these old movies from the 80s that I watched as a kid with my boys. They've said, we've gotten so bored. They're like, well, Dad, what did you watch? And we watched this movie based on this great book called The Little Prince. And the greatest opening line in a movie, it says, what is essential is invisible to the eye. And what we're finding is that a lot of our essential workers have been invisible to us. And that is, tell me an essential worker, whether it's someone delivering my groceries or someone putting my takeout meal in the back of my seat, and I'll show you someone who we haven't paid a living wage in the last 20 years. And they're finally getting some of the recognition they deserve. We lean out our window every night at 7 p.m. and we applaud for our healthcare workers, which is absolutely the right thing to do, and it's a nice moment. But do we lean out the window at 6 or 8 p.m. and applaud the people who are putting themselves in harm's way to make sure that we get our Purell and our Nespresso pods within 48 hours? No, because it's more of a war on the poor. We see these people as untouchable. They screwed up. We live in a meritocracy, we'd like to think, which means that people deserve to be billionaires. But the ugly side of that is if you're making minimum wage, bagging groceries, it means you screwed up. It means it's your fault. And it's not usually their fault. It's a function of a caste system we have. So I'm hoping that what is essential becomes more visible to the eye, if you will. In terms of Amazon, imagine that Jeff Bezos and the president and Doug McMillon got in a room and said, how do we double the stock price of Amazon and Walmart? He said, I know, I'm going to put between $1,200 and $5,000 indirectly in the form of stimulus in the hands of every American. And better yet, I'm going to close down 98% of your competition so they have nowhere to spend it but Walmart or Amazon. That is effectively what has happened here. You are seeing stimulus money helicoptered into the hands of consumers. And where do they spend it? Amazon or Walmart, because Restoration Hardware, Urban Outfitters, and Sephora have all been closed. This might as well be called the Amazon and Walmart Shareholder Act. It is extraordinary. Amazon, first $2 trillion company on the backs of incredible momentum through the crisis. And more importantly, they will become the fastest growing healthcare company in the world by 2025.
And as you point out, Amazon is hiring over the last 2 months, roughly 175,000 people. Scott Galloway, we really appreciate your being here. You are a professor at New York University, a professor of marketing. It's always good to get your opinions. And when your kids are age appropriate, it's dated, it's even somewhat sexist, but the movie from the 80s, I would suggest Weird Science. It'll bring a smile to anybody's face.
Kelly LeBrock. Is that right, Kelly LeBrock?
All right. As we move forward, want to let you know that we were talking about Amazon. They're going to report later this month their earnings, but we are going to get this week Netflix and Delta, so we're paying attention
Profits,
to that.
baby,
More
profits.
Yahoo Finance right after this.
So I'm here for profits. Oh, look at that. Came down and shot back up. Come on, stop playing with me. We don't got time for this.
And welcome back to Yahoo Finance. We are off the session lows, but still down on the Dow, a little bit over 200 points. And of course, we're paying attention to oil. WTI is trading at $10.25 a barrel, off more than 40% at this moment. Ed Al-Husseini is Columbia Threadneedle Investment Senior Interest Rate and Currency Analyst, and he's joining us now to talk about some of the steps the Fed has taken and future steps that Fed may take. And a lot of this has to do, it depends where you fall, right? It has to do with, are you worried about inflation, or are you worried about disinflation and even perhaps a deflationary spiral? Which is more urgent, do you think, to the Fed, Ed?
No, it's fair enough. I think the lesson of the previous crisis is that outright disinflation, where inflation is persistently negative, that risk is relatively low. At the same time, the risk that inflation expectations continue to take another step down from where we were, let's say, on average over the past 5 years, that risk is exceptionally high. So a period of disinflation following this recession is really top of mind for the Fed. And since we're starting with Fed funds at practically zero, that's a significant risk that they have to react to.
Hey, Ed, it's Brian Chung here. So when we're looking at bond yields here in the United States, I mean, what does it tell you about where we might be going in the next, let's say, short term to medium term? Because there's a lot of concern that we might hit nominal negative yields ahead of all of this, right? There were a lot of concerns that, I mean, we did actually see it on the short end of the curve. So what does it tell you about the optimism about where investors kind of see the future here in the United States and what that recovery might look like?
Yeah, it's difficult. To some extent, there are two stories here. First is the front end of the curve, so the Fed funds. It's really telling us that the Fed is anchoring the front end at around zero for a protracted period of time going forward. They've given us forward guidance that they will stay at zero, again, to bring some of that inflation back and to bring employment back. That's going to be with us for at least the next 5 years, in my mind. The longer end of the curve also reflects what they're doing in terms of purchases, so in terms of QE. So the Fed is essentially putting its weight on the longer end of the curve to flatten it out, again, to juice financial conditions, to allow some of the tightening that we've seen in the credit and the equity space to be offset. So the curve is relatively flat. I think it has room to flatten further. In terms of negative rates, again, the front end of the curve is unlikely to see those negative rates, at least on any persistent basis. The longer end of the curve, though, again, 10-year yields that are at around 50 to 60 basis points, if we have another sharp round of risk off, we could see that long end dip into negative territory.
Ed, it's Julie here. And so if you're looking at that trajectory and you're considering the stimulus that's out there, the Fed once again adding to its already enormous balance sheet, and not only that, fiscal stimulus, right? You're saying by the end of the year, we could see $5 trillion in fiscal stimulus. Is that somewhat divorced from the action in the bond market? Because with that, I mean, it almost doesn't have any meaning anymore because the numbers have gotten to such a size. Do they still have any relationship with what's going on in the Treasury market?
I think it's a very active debate, both in terms of market participants, but also in terms of price action. We do have a lot of coupon supply that will be coming through. The Treasury will have to figure out how to fund this deficit. And look, realistically, the deficit numbers will be around 15 to 20% of GDP this year. That's up from about 5% last year, so a significant ramp up. In my mind, the most efficient way to do it is by funding it in the front end of the curve. Issuing coupons, 10, 30-year bonds at the same time that the Fed is buying them is a little bit counterproductive. So if the Treasury, again, follows the template that they had in 2008, 2009, they issue the front end. Most of that supply will be absorbed domestically. We don't really have to rely on foreign demand to absorb that supply. And the disruption to the long end, in other words, the steepening to the curve because the Treasury is issuing supply is likely to be very small. And that's kind of my expectation going into the end of this year.
Ed, I am curious, and it's rather a simple question, but help me understand. If that's the case, why aren't we seeing mortgage rates really fall even more than they have?
Well, a couple of things. First, there's greater credit risk in the mortgage market that is currently being priced. Second, there are really execution bottlenecks in terms of being able to access those lower rates in the mortgage market. The pass-through of the longer end of the Treasury curve into mortgage-backed securities, into your retail mortgage lending market is going to see a disconnect for some time. And I think one of the reasons the Fed has stepped in more directly into that market and is likely to do more, particularly with mortgage servicers, is because this disconnect has been quite persistent.
Ed Al-Husseini is Columbia Capital's investment senior interest rate and currency analyst. Thank you for being here on Yahoo Finance. Just want to let you know right now that WTI crude oil, the May contract, is now at a low of the day, $10.01 a barrel. When we come back, United Airlines lost $100 million a day just in the last 2 weeks of March, and it's going to get a lot worse. Peter Greenberg, CBS's travel editor, is going to join us to talk about what travel bargains, bargains, may be out there for you in the future. Welcome back to Yahoo Finance. We're watching the Dow sell off more than 200 points. NASDAQ is up barely, up over about 3 points, and the S&P 500 off 15 points. United Airlines gave us a preview of what we can expect when Delta reports this week, Southwest reports this week, then we'll get American, JetBlue next week, actually. United lost $100 million a day just in the last 2 weeks, $100 million a day in March. Peter Greenberg is the CBS News travel editor, and he's joining us now because the airlines are really up against a wall here, Peter. It's going to be a disaster, the earnings reports. We know that. But can you and I, as consumers, expect to see travel resume, at least within a year or two, to what we had before this crisis?
Not even close. You know, the airlines can't discount their way out of this. The numbers are terrible, not just now, but moving forward. And when you put into perspective the idea that there's not going to be one green light or all clear signal saying, okay, you can all go back to the airport, it's not going to work that way. And the problem right now is you've got airlines that have parked 95% of their planes. They've already said they're going to come back smaller. And everybody's asking, you know, when are we going to come back? The real question that they got to ask, which is what you just asked, is how are we going to come back? Delta Airlines, for example, has already announced that through the end of May and probably through the end of June, they're only going to board people into the aisle or window seats. There will be no center seats, at least not booked. They'll board from the back to the front so that nobody walks by somebody who's already seated. Okay, those are the new distance protocols. But what does that do to their business model? If every middle seat going forward is going to be empty, well, Delta could probably adjust to that by raising airfares between $80 and $200 a ticket. But what does that do to the business model of airlines like Spirit and Frontier and Southwest that have predicated their entire business approach on filling every seat? So let's not think for a minute we're going to come back into a wave of discounts, because first we have to figure out where we're going and actually when we're going to get there.
And Peter, also, even it's Julie here. It's good to see you. Even as they come out with these rules and the different ways that we may be traveling, and this applies to not just airlines, but cruise ships and casinos and everything, every other way that we travel. Even if they come up with these rules, the question is, will people still want to get on a plane, even if you've got a seat in between you? Because for all of us who are living through this, particularly those who live in dense areas, you have a psychological response now to being in a crowd, even if there's a seat span in between you.
Well, if you go back to our behavior after 9/11, we didn't want to fly over a large body of water because we were worried about terrorism. Today, we don't want to fly anywhere because we're worried about either getting quarantined or not being able to get back, or just the actual atmosphere in which we're flying. So what you're going to see more than likely is when we do come back in staggering waves, it'll be domestic U.S. travel, drive-to destinations. Fuel prices are low. You're going to see RV sales go through the roof. You're going to see national parks get crowded, campgrounds get crowded, families traveling together as one unit in their quarantine mobile, otherwise known as an RV, so that they don't have to stop and go to a hotel or even go to a restaurant. But here's the real key. Let's go back to the old days. Some of us are old enough to remember when we used to have to carry a yellow health card if we wanted to go overseas to show that we were properly vaccinated against smallpox, yellow fever, etc. Get ready for the new rules. What makes anybody think that when the door is finally opened, France is going to let me come over? Spain is going to let me come over. They're going to want assurances and guarantees. The lawyers are going to have a field day here in terms of liability, not to mention protecting their borders, that I've been either properly tested negative, or I did the antibody test, or in the absence of a vaccine down the road, that I've been properly vaccinated. So no one's going to be, I would probably guess, even though I'd love to go to Paris in July, I may not get there until September and October when those new rules are in place.
Peter, I'm curious about what's going to happen to the businesses tied to airlines. We see the airlines going back to Treasury. United's going to ask for another $4.5 billion in loans on top of what they've already gotten, the $5 billion. But what about Hertz? What about National Rent-A-Car? What's going to happen to those kinds of businesses?
Right. Well, what's happening to Hertz is they got fleets of cars just parked in lots all around the country. So they're in big trouble because nobody's renting cars. Business travel, remember, it's corporate travel policy. People are still not being allowed to travel, right? Non-essential travel. Nobody's going to rent a car. Hertz could go into bankruptcy and probably recover in the short term. But what does this say to Avis and National and everybody else? Their business model is going to have to change.
Hi, Peter. It's Julia LaRoche. Great to see you again. It kind of sounds like, you're kind of digging into a bit of the ripple effects here when it comes to travel. So breaking that down further, whether or not it's the corporate travel or even just the leisure, when we're talking about 22 million who in 4 weeks have applied for unemployment insurance, you're going to presume they're probably not going to take a vacation until we're kind of back on track. What are the conversations that you're having right now across the travel, tourism industry and the worries that they might have just even further out?
Well, the real worry right now, and nobody's talking about it, is credit card debt and credit card payment default. Companies like Capital One, a B of A, Chase, Citibank, they're looking at this in a different way because, after all, it's one thing you want to go somewhere, how are you going to pay for it? You also have credit card companies right now telling their members or their consumers that if they want to, they might defer 3 months of payment. But anybody who jumps onto that bandwagon needs to know that then their card is frozen. They can't add any more new charges to it. And then what's going to happen when they come back out of it? Now, the charge card guys, the American Express guys, they're looking at average spend going down almost 30% last month. And what happens when those people start defaulting? Because those charges are due in full. It's not revolving credit. So we've got a serious problem here coming out of this as to how people are going to spend their money, assuming they have any.
Peter, it sounds like an extravagant question in times like these, but the cruise industry, I think last time we spoke to you, we talked about the fact that for 2021, bookings are already up. Is this realistic? What's going to happen to the cruise lines?
Whoever told you that is deluded, okay? Bookings are not up. That was a misunderstanding. They were looking at forward bookings of 2021 ahead of last year for a certain kind of cruise further out, meaning bookings in June or July. But overall, bookings are not up. They're down 20%.
And so do you think the cruise lines get out of this? Or last question to you, we're going to see them fold?
Well, here's the thing. The bottom line is the cruise lines have a huge hill to climb. This year, they've written off. I'll give you one example. The Alaska cruise market, which is a huge one for them every summer, they're essentially canceling it because of Canada and a 1939 act that nobody remembers. It's called the Jones Act. It was enacted to protect the U.S. Merchant Marine. It killed the U.S. Merchant Marine. And the rule was no ship, unless it's registered in the U.S., could sail between two U.S. ports without stopping in a foreign port first, which is why cruises to Alaska usually start in Vancouver so they can then go up to a U.S. state, otherwise known as Alaska. Canada has banned cruise ships through July. That's it. Season over.
Peter Greenberg from CBS, the CBS News travel editor. Good to have you here on Yahoo Finance. All the best to you, Peter.
You got it, Adam.
When we come back, we're going to take a look at what's happening with COVID-19 and reopening cities right here on Yahoo Finance. And welcome back to Yahoo Finance. We're watching a sell-off, although we definitely are off session lows down now, off about 150 points. We want to talk about reopening parts of cities and states from the COVID-19 economic shutdown. And to help us understand this is Anjali Kemlani. She covers COVID and coronavirus for us here at Yahoo Finance, but she knows firsthand what COVID-19 can do and why testing is so important. We are thrilled you have recovered. Can you just share with us, you've talked publicly about this, Anjali, what was it like?
Thanks, Adam. Yeah, it's everything that they tell you. The only way that I was able to really tell what I was experiencing is because there has been so much information out there about what the symptoms are and what to kind of expect. And so it was almost like a checklist from day one. Fever first, then some soreness and aches. There were a couple days where I couldn't really breathe so well, and that was very scary. But thankfully, I had a lot of people that I was able to call and kind of talk me through what was necessary to do and when it was necessary for me to seek medical attention. And I was able to do that. So now here I am, much better, thankfully.
When you talk about that medical attention, what did you do? Because a lot of people are going to have to do this as we reopen cities.
Right. So I definitely kept in touch with a primary care physician. I also did a telehealth visit. with someone who I didn't know. And that was a little bit interesting to kind of see the process and to kind of see how much volume, I've covered how much volume has increased in telehealth visits. So keeping track with someone from afar and having someone monitor, checking your fever every couple of hours and noting down your symptoms and basically tracking in like a diary was what I did. And then it got to the point where I basically knew that I had it and was recommended for getting a test. And those, as we know, are hard to come by. I was able to call someone I knew to get me into an urgent care center to get those tests. We know that clinical settings that are not emergency are sort of better to get the testing there. And I got the results within a couple of days that I had tested positive. And that was mostly after I'd already gone through all the symptoms and actually had the energy to go out and get that test.
So, Anjali, move from your experience, and again, welcome back, to what we are seeing more broadly with testing, because the refrain that we have been hearing now over the past week at least is if we are going to reopen, we need more testing. We're now hearing more companies like Amazon say they're going to develop their own testing. How does all of that work? I mean, it seems like that there is a supply problem.
There is a supply problem, Julie, and that's one of the things that we're looking at is, while the administration is very bullish on reopening and has been talking about, the need for testing and the ability to test and finding where that capacity is. We know we've repeatedly heard Dr. Burke say there are machines not being used, but there are reasons behind that. We know that supplies are in shortage. We know that cost of testing is also an issue that some commercial labs are facing, and whether or not they're properly being reimbursed for the cost of doing these procedures. So while companies like Amazon may have the resources, and we're probably going to see a lot more companies that do have the resources either find tests that are not approved by the FDA or are just being sold on the market. Startup companies are also out there. So we're going to see a lot more of that. And that's the thing to remember, is that to just remain cautious and vigilant. What's out there may not be approved and it may not be accurate. Right now, the FDA only has approved 4 antibody tests, and that is something that we're working on. We see that New York is also starting at the state level to produce their own tests. So we're going to see a lot of ideas like this and a lot of resources being put into this, but whether or not they are accurate and whether or not they can get some of the same supplies that these clinical labs are finding in shortage remains to be seen, because it's an original sourcing problem for the most part. The swabs, we know the Defense Production Act is going to be addressing, but whether or not reagents can be found is another question that remains to be answered.
Anjali Khemlani, good to have you back here at Yahoo Finance. More after this.
Thanks, Adam.
Welcome back to Yahoo Finance. As we watch markets sell off, lots of businesses are doing their part to help people on the front lines of COVID-19 in this crisis. And one of those companies is now making surgical gowns. Joining us from Laws of Motion, the founder, Carly BG, to talk about how you're shifting from high fashion to surgical gowns that are so desperately needed. Thank you and welcome. So what are you doing specifically?
Thank you, Adam. Laws of Motion, in partnership with Governor Cuomo's team, is producing over 2 million surgical gowns for the state of New York. We went from making perfect fitting women's clothing to medical grade surgical gowns, and are proud to share that we delivered our first 100,000 gowns last week, and we'll be delivering over 2 million in the next 5 weeks.
Thanks for joining us. I'm curious, when you make a pivot like this and you're pivoting into something that is not what your typical manufacturing is, how do you make that pivot? And also, when you're now putting I know you're in partnership with New York State, do you turn the gowns directly over the state? Because I know there have been lots of sort of sourcing questions, right? That the state has ordered some gowns from some sources, and then the federal government swoops in and takes them. So how do you make sure the gowns get to where they need to be?
Great question, Julie. Laws of Motion is a New York City-based brand that lives and works at the epicenter of COVID-19. So when we realized that we were able to help solve for the dire need of PPE in the state, it wasn't only the right decision, it was the only decision. And we are an early stage company that is rooted in data science and technology, and that has allowed us to be incredibly nimble in how we have pivoted to quite literally, 10,000x our supply chain overnight. Yes, that is correct. We are delivering gowns directly to New York State. And I will say that I went with our first delivery this past week, and there's something incredibly inspirational about watching a delivery come off of your truck and immediately be added to trucks that are going directly to hospitals across New York State.
We use the term surgical gown. Are they actual just for surgery, or these are the protective gear that men and women can wear as they're treating COVID-19 patients? And are they disposable? Can they be washed? How does this work?
Laws of Motion produces surgical gowns that are one-time use, pending FDA approvals, but these are Class 2 surgical gowns that provide all of the requirements and specifications, including ANSI moisture wicking capabilities and flammability protection for our frontline heroes who are fighting COVID-19. And, as you can imagine, in the time that we are living in today, the extent that we had to go to be doing at-home testing to ensure that, any supplier we partnered with, and we have a America's-based supply chain and manufacturing network, was going to provide the level of quality that was required to protect our heroes who are fighting so tirelessly to save lives. And so the testing that we've done with ANSI, for moisture wicking, and then also across the board to ensure FDA standards has been quite robust.
Hey, and it's Brian Chung here, and you're running a company at the same time as well, and every company out there is facing a lot of pressure with the COVID-19 related closures. I'm wondering, from your business standpoint, in addition to what you're doing, quite charitably, what are the pressures that you're seeing on your business? Have you considered maybe turning to a PPP loan? Have you tried something like that? What does it look like from a business operating standpoint right now?
Absolutely. I mean, it was definitely taking a core capability that Laws of Motion had and pivoting it in a way that could be helpful. We made the decision over a month ago that our team was going to dig into the ingenuity and innovation that got us here in the first place and use that to pivot and do everything that we could to help. And while this was not a profit-driven decision, it was the right decision. And so what we've seen as a business is how you dig into the core DNA that makes you you, and use that to better support those in need during this time.
All right. Carly BG, Laws of Motion founder, thank you for being here on Yahoo Finance. We're going to be right back.
Thank you.
watching a massive sell-off in crude futures, and Jared Blickery is here to help us explain what's going on at Yahoo Finance. Jared?
Yeah, we're seeing crude oil, at least a May contract, which goes off the board tomorrow, down 45%, just an incredible move here. And we can see how it's getting really hammered. Now, most brokers are requiring retail traders to get out of their positions today. And so that's just further exacerbating the price downswing here. But these are the lowest prices we've seen since 1986, approaching record lows. Now, that's the May contract. Now we're looking at the June contract. That's down only 9% today. But as supplies at Cushing, as their storage fills out over the next few weeks, we could have the same situation with June. So something to keep in mind. Let's take a look at stocks. Still underwater here for the most part, except for the NASDAQ composite. Also, the Russell 2000 has turned positive. We can see the Dow's off about 177 points here. Let's take a look at the S&P 500, which is down only about 1/3% now. And we did gap down to at the open, and we've been climbing ever since. This is a pretty strong rally here. And if we take a look over the last 5 days, we can see we have a nice rally and trend, which is upwards underway. Let's take a look at the 10-year T-note yield, because that is a little bit depressed today, down only 1 basis point, had been down 3. Nevertheless, Russell 2000 and some of the value and cyclicals clawing back on that. A U.S. dollar index is up slightly. And let's finally take a look at the Dow Jones heat map. We can see mostly red here, except for some staples, but Microsoft is down 17 basis points. Apple's down about 1%. Some of the bigger losers, Procter & Gamble down 2%, and the oils. You look at Exxon and Chevron, they had been down 3 or 4%, but they've paired those gains. And then let's take a look at our sectors, and we can see that communication services and healthcare are leading, Adam.
Jared, thank you very much. Coming up in the next hour on Yahoo Finance, attention all you haters who are upset with the Fed for the incredible expansion of its balance sheet. We've got David Zervos from Jefferies, the chief market strategist, who says, I understand your frustration. More on Yahoo Finance after this.